Good morning, Joel. How are you today? How's everyone doing? Nice to see you guys. Call to gear. I'm not sure I'm saying that right, but welcome to the classroom. Man, Joel, it warms my heart to hear that you're doing excellent. Haven't looked at your trade yet, but somebody gave you the money sign on it. Safia? RTY, huh? Odds favorable, clear path, perfect pullback, let's get paid. You were a little jumpy? Hey, good morning. Call to gear, am I saying that correctly? Okay, awesome. I like to call people by their first name, so if I mess that up, just all you have to do is correct me. Um, Welcome to the classroom. Welcome to Nexgen. I'm excited to have you here. I'm a few minutes early. Okay, Chris, can I go with Chris then? Awesome. I always go by the code names until you guys tell me not to. So some people like the anonymity. Some people don't want people to know who they are. I'm a few minutes early today. So I'm just going to ramble a little bit. You guys know I love rambling. Good morning, Gary. Nice long in that NASDAQ. I did the same thing. Dwight, good to see you. I took that NASDAQ long. Oh my gosh, I was so confident in it. I literally went to go take a shower and came back with profit targets reached. When everything lines up, it gets pretty easy. So we're going to keep doing that. Safia, let's see what Safia's doing stuff, guys. I love it. Um, I'm not going to look at the pictures yet. I'm going to save them for after we build that foundation. Um, and I'm 3 minutes early. So it's the 1st of November. Everybody have a belly full of candy, buy it for the kids. They don't come get it. And you're like, well, I guess I got to eat it. Um, Safia's putting on a clinic every day, right? Told you to find a pattern that works for you and do it. That's all I did. Guys, I want you to remember that. All I do is throw you the keys. You guys are learning to drive. Time to get paid now. Amen. Why you don't buy candy? Man, Gary, me too. I have a sugar problem. But sugar doesn't have any problem with me, and that's where the challenge comes in. I do love it. Getting old, got to stay in shape. I got a bad back. My surgeon said do not put weight on, so I'm trying to stay svelte, I think is the word. We're still a couple minutes out, guys. Everything is a single serving bag, yeah. And you know what? It turns out that I'm a family of four when you look at the calories. You took a salsa class last night? Oh, that's awesome. My wife and I used to dance every Sunday night when we were dating. We would go do that like Lindy Hop and swing dancing. Every Sunday night there was a big rockabilly club that we would go to. It was so much fun, and we keep threatening to go back and do salsa or ballroom or just something so we get to dance together. So you may have just inspired me. I love it, man. And it gives you a chance to hold on to that lady for like most of the night, right? That's always a good thing. They get used to it. That carries back onto the house. Um, Safia, you have to stop per your doc. Don't let her add meds. Diet and exercise every time. Diet and exercise. Guys, I feel like we're close enough to 9. Should we get this going? Let's do this. Um, West Coast swing. Oh no, yeah, okay. That's tough. That's tough. Type 1, there's just nothing you can do about it, right? Type 2, there's a solution. Rock and roll. There's the club in every city. And they usually do lessons at the beginning. I've got a good friend of mine from high school. She's in a honky tonk band in Austin, and they teach all the dancing before every concert so that people will swing. Not swing, that sounds bad. She's a nutritional coach. Right on. I love it. I love getting to know more about you guys in this classroom. This is one of the things I like about the community. Um, it's a lot of fun. All right, guys, let's talk about news real quick, right? Never, Gary, never. Urban Cowboy forever. Um, forexfactory.com/calendar. Guys, this is my first stop every morning. Thank goodness, because this morning, November 1st at 8:15 a.m., we had that ADP non-farm employment change. I'm not going to lie. I don't know much about what it is, but I do know that it can move the market. It can create a little bit of a bump or a spike. And guys, I want to remind you today, check it out. FOMC statement. What does that mean? That means that there is an enormous amount of people um, waiting to hear. Which means, and guys, this is traditionally, I'm saying trade your rules, but traditionally, FOMC day is a lot like the morning on crude oil inventories day, which is like today. You don't get that follow through. People jockeying for position, um, all that good stuff. Safia, take that candy and go drop it off somewhere. Drop it off, go to the hospital, and just walk right up to the front desk and go, hey guys, the kids didn't come. I hope you have an awesome day. They'll love it. Or go to a restaurant and give it to the server staffs. They'll love you forever. Um, so guys, I'm checking news. I'm making sure FOMC at 2. Do not get caught in the middle of FOMC, guys. That thing spikes for like 20 minutes. And then at 10 a.m., we're going to have manufacturing PMI, Jolt's job opening. A lot of news going on today, guys. Set a timer for 10 a.m. and say, hey, I don't want to be in front of that craziness. But I do this every morning. I go to and I look at it while my charts are opening, while my coffee's brewing, and I just want to make sure that I'm not jumping in front of things. Then, of course, everything that I talk about comes from the tutorial section. Chris, one of the things that you're going to notice, and I hope you appreciate, is that there are no secrets with Nexgen. There's literally nothing that we ever want to keep from you. This classroom is designed to build a foundation. This classroom is designed to give you a skill set that allows you to grow with the software. My job in this room is to teach indicators. And as luck would have it, my brother is 27 years ahead of me. My brother created the software. He's going to be in Friday. He's going to teach you and help you take the foundation that you've built with this classroom, and he's going to take some advanced concepts and kind of grow with them a little bit. Luciano, good morning. Nice to see you. So I want you guys to remember, there's a lot of times where you're like, oh, it's the same thing in this classroom. This classroom is designed to build a foundation through repetition, to give you confidence through the memory of success. This classroom isn't the end of the road. This class is going to teach you to read your indicators so that you can pave your own way. And then I'll be with you every step of the way. But we talk about, first and foremost in this classroom, guys, this high probability trade. It's the most boring trade in the history of trades because it happens maybe 4 or 5 times a day. But this high probability trend trade is a trade that typically wins 70 to 80% of the time. It's a trade that has every advantage on the charts that you're looking at. Each indicator agrees with the trade. You're going to have the strongest triggers and nothing in the way between you and your targets, guys. And this high probability trend trade is a very relaxing trade to take when you understand the advantages. And the cool thing is, it really is. It's a tight-knit small town community, but we welcome strangers all the time. This high probability trend trade is going to teach you the most valuable skill. It's going to make you a chart reader. And it seems weird. It's like, oh man, I showed up to be a day trader, not a chart reader. But no, being able to read your charts, guys, that's the secret, right? Because once you understand what the chart is telling you, you're going to find your patterns. You're going to find your path. And chart reading is going to give you three very key concepts that nobody can take away from you. You're going to understand where the market is likely to continue. Your likely to continue spot initially is going to be the entry for the highest probability trend trade. Ultimately, it may be a momentum style trade or an HVA trade. It might be an edge trade. But your understanding of where the market is likely to continue is going to pinpoint your entries no matter what it is that you're trading. You'll understand where the market is likely to go, as well as where it's likely to stop. And very often these are the same point. And you'll use them for targets. You'll use them to take profits at these key areas. And what you'll find after about 2 days in this room is that these key areas that are on your charts, these Fibonacci areas, man, they are gold. And very often they stop the market to the tick, they reverse the market. And we're just going to go through simple processes how to recognize when they're likely to hold or stop, when the market is likely to get there, and then we're going to refine down to an entry. And we're going to do it all with a high probability trend trade. Um, your ability to read your charts is going to open the doors. Um, can you not see me, Chris? Oh, then you're good, brother. You got everything you need. I'm going to show everything on my screen. I'm going to talk about it. I'm going to point it out. I'm going to drop pictures in the room. Anytime I drop a picture in the room, let me show you how this works too, because I want you to be able to do this. So, for example, I'm going to drop my spreadsheet in the room. You can download it, and I would encourage you to do that. Or you can also click on it and just hold and drag it over to your desktop. But I share a lot of pictures in this room. I share a lot of files. I want you to be comfortable taking them, make them yours. Um, and that's going to be a little bit of a segue for us there. But before I do that, your chart reading, guys, on that high probability trend trade. Good morning, John Novak. Guys, this is going to open up your world with Nexgen. This is going to prepare you for medium probability trades. And medium probability trades are defined as when most of the indicators line up for a trade. However, a small issue exists, and I want you to pay attention to the fact that issue is singular. Um, your ability to read your charts is going to identify these issues. Your ability to read your charts is going to make it so that you can manage them assertively. Your ability to read your charts is going to identify trouble in the way. And what's going to happen is your chart reading is going to make it so that you can manage trades that are outside of the absolute best of the best. And it really will be the vast majority of your trades. So we're going to focus on the high probability trend trade. And it's only three rules. Chris, you're going to find that I try to bring it down to the lowest common denominator. I try to keep everything as simple as possible. I'm an artsy fartsy English lit major, so the technical side of things aren't my thing. But simplicity yields results. And we're going to look for three rules. And we're going to look for three rules because each rule is going to give you a very specific advantage. And it's the advantages together that create a high probability trend trade. So we're going to talk only about the entries right now. And we're going to look for these three rules. This is where I'm going to drop pictures in the room, guys. Commit these simple advantage words to memory. We're going to look for these three rules to be met on only two charts. Going to keep it simple in the beginning. Going to keep it focused in the beginning. Not going to burden ourselves with additional charts and indicators. Because remember, right now we're learning to read. And we're going to use a large chart primarily. Um, and first, everything starts on the large chart. Large chart leads the way because your large chart is what the large crowd in the market wants to have happen. It's what the people that move the market have decided needs to happen. And this large chart with the most current bar, I'm stumbling today, is going to define direction. It's going to define momentum, and it's going to define the areas that there may be a reaction at. This very broad stroke of a brush is the overall opinion of the market. Your first two out of three rules come to be on that large chart. And before you ever turn your attention to a small chart, your first two rules will be met, and you will be looking for an entry with the advantage of momentum and the advantage of a clear path. And when you have those, it's this small chart that's going to pinpoint that area where the market is likely to continue. That small chart is going to refine the broad stroke of a brush. You're going to be able to pinpoint your area for entry. And by using that smaller, faster chart, you will be able to reduce your risk as well as maximize your profit potential. Um, there are probably a million ways to use the software to your advantage. This foundational approach, three rules on two charts, is going to open the door so that you're able to. Um, And I want to share with you the path. And this is especially for you folks that are brand new with me. I'm looking in the room here. The most important thing that you can do in this classroom is share your pictures. Share the trades that you take, share the questions that you have, and really open yourself up to be comfortable with just being okay with the idea that you're not an expert at this yet. If you were, I wouldn't have a job. So post your trades in class, post your questions in class, post your chart reads in class. And what happens is it becomes a one-on-one session between us. Every time you post in the room, we're going to have a conversation. We're going to talk about what you see, what you did, why you did it, the advantages that were in place. And if there's a challenge happening, well, then we're going to talk about ways to sort out, fix, and avoid that challenge. And it really is. It's a private session, 15 hours a week, every week, live, with the live market, with your live trades. And then use the spreadsheet, the one that I just posted in the room, guys. It's just a trade journal. That's all it is. Even the CME says that all traders should have a trade journal. And what it is it's an opportunity for you to take every trade, those pictures that you're going to take of every trade, and just drop it in here and talk about the type of the trade and the advantages and how you felt. And then there's a notes section, and I think that the notes section is a huge advantage because after you get feedback from posting in the room, you can drop that in the notes section, maybe what you need to work on with that trade. And every morning you're going to study what you did yesterday. You're going to study the previous day's trades or even the previous 2 days' trades. And you're going to ask yourself what worked. And I'm going to tell you right now, the answer to what worked is very often going to be momentum, a clear path, and an entry area. And you're also going to ask yourself what didn't work. And then on that same Sunday school answer, the absence of momentum, a clear path, or an entry area are typically some of the reasons why things don't work. And what felt easy? What kept you relaxed? You know it. Momentum, clear path, and entry area does that. And then the lack of those things is going to make it feel forced. It's going to make you nervous. But taking 5 minutes with a cup of coffee while your charts load, you've looked at the news, and do that brief historical study every morning. It's going to prepare you for the day and accelerate the learning. But it's imperative that you annotate your charts, that you know why you did what you did. Because you're going to go back and study it. So make sure that you write your rules on the chart. Hopefully, you're writing momentum, clear path, and entry area. Make sure that you line up the timestamps and prices on both charts so that you can compare the advantages of momentum and a clear path and see how you refined it to that entry and that exit. And make sure that those are clear and that they line up. And that's going to get you the best feedback as well. We're going to learn the trigger lines and the Fibonacci rules for when it's okay to trade. I'm going to talk about the looks associated with the words, and we are going to drill them into your head until all that repetition creates recognition. I need you simulating. I need you to not say, well, I'll wait until I'm really good at this before I try to practice it. I want you to practice it. I want you to make every mistake that you can possibly make because the more mistakes that there are, the more opportunities to grow in your education there become. Post your pictures in class until you're sure you have the correct rules. You will get there faster to always having the correct rules if you show me your pictures and maybe a misunderstanding of where you're not clear. Don't practice the wrong trades. It feels good to watch that P&L grow, but if you're doing it with trades that don't have an advantage, if you're doing it because you're getting lucky, not because it's a pattern that repeats itself and wins more than it loses, I'm telling you, the second you go live, that luck seems to run out. We're going to simplify heavily. We're going to focus on the high probability trend trade, specifically the entry. Um, and then you just have to decide what you're going to commit to. And that's where we go back to the spreadsheet once again. Every picture you take of a trade that fits those rules, I want you to take a picture and I want you to drop it into the my personal trade setups. And this is going to be what you commit to. So when I say what's it got to look like for me to take a short trade, I can click on this link. And what we're going to see is an awful lot of odds favorable momentum, that first advantage. We're going to make sure that we have a clear path. I'm writing the rules on here. And then this is your refinement chart. And this is exactly what we're going to study each and every day. But if you put it into your spreadsheet, you can go through and click 3 or 4 times before the day gets going. Set your brain up for what you're looking for. And then the second page is where I liberate from you guys all the amazing trades that you take. When you have those advantages, momentum, a clear path, entry areas, and it's just outstanding. I steal it. There are 273-ish pictures of high probability trend trades, of medium probability trend trades, but they all revolve around advantages and how the clients are able to take those advantages and create plans for themselves. There are sections if you are an adrenaline junkie and you want to trade the NASDAQ. There's a couple little things that you can do to make your day a little easier. There's ideas on management. We focus on entry first, and we're going to move to management. Patterns that repeat, the things that happen over and over in the market. You can begin to take pictures and recognize them and create expectations based on patterns. And then termination conditions, those areas that are likely to stop the market. I have a whole section dedicated to those because, to be honest with you, I was the king of trading into them. But you want to look at these pictures every day so that it becomes easy because what's easy to recognize in a picture that isn't moving takes a little bit of practice and a little bit of simulation to be able to catch it in a live market. So we're going to focus, we're going to get right into it and look at these 3 rules. And we're going to start with odds favorable momentum. We're going to start with strong trigger lines on the large chart. And in order to have strong trigger lines, the first thing that you have to have is the trend. Um, if the background on your large chart is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend and you're only looking for rules to be met for high probability trend trade short. And let me show you how smart you are with the first lesson. Guys, the background on crude oil is green. We're in an uptrend. And when we're in an uptrend, we're going to look for strong trigger lines, which is exactly what we're seeing right here, separation between the small and the large, because that's the most advantageous look to buy a pullback to Fibonacci support. I sure hope a lot of you guys are going to show me this picture. Chris, this is what we teach every day. We talk about these areas that hold, create momentum, and then we refine it back to this perfect entry. And we're going to do that by looking for strong trigger lines in the direction of the trend. So in an uptrend, it means that your small triggers, these solid lines, have broken above your large triggers, these dashed lines. It's really that easy. The space in between the two, it's like scissors that are open. The only way you can cut is if your scissors open up, right? Otherwise, you're just taking a stab at things. This is strong triggers. Strong triggers means that the odds are favorable for the market to continue in the direction of the trend. That's what it looks like in an uptrend. In a downtrend, small triggers below the large triggers. Space between the two lets me know that the odds are favorable for it to continue in the direction of the trend. And guys, this is the look. When you have these strong triggers, do you see these tails? This is a large chart. This tail is that pullback on a smaller, faster chart. This is the best of the best look for knowing that it's time to look for an entry, to buy a pullback on a smaller, faster chart to Fibonacci support, or to sell a pullback on a smaller, faster chart to Fibonacci resistance. We're going to use these tails as a study tool. We don't trade the tails, but when we have that odds favorable momentum and we go back and we see that those tails have formed, we're going to circle the bottom of it. And let me show you, like I did right here. This is the entry that we're focused on for 20 days. Notice how the circle of the tail lines up with Fibonacci support on the smaller, faster chart. Gosh, that's a pretty trade. I can't wait to go back and talk about the entry. So this is odds favorable momentum. It doesn't happen every second of every day. You're going to find that it happens randomly throughout the day, and odds favorable momentum creates that advantage of a market that's likely to continue. But we also want to identify the opposite side of that, when the advantage goes away. And that happens with what we call weak triggers. And weak triggers mean that your small triggers have worked their way inside of the large triggers. Your large triggers have kind of gobbled up those small triggers. And when you have this look, anything can happen up or down. It becomes kind of a crapshoot. You don't know whether it's going to continue in the direction or you don't know whether or not it's going to reverse. So we call these anything can happen triggers. So if we go back to the same one where we saw the momentum throughout the day, anything can happen triggers, those weak and large triggers, precede a reversal. Precede a reversal. This is your cue to sit on your hands and do nothing. It's typically going into Fibonacci areas, and it creates challenges. The other challenge that the trigger lines are going to keep you from committing to is when there's indecision in the market, when the buyers and sellers are fighting it out. They're duking it out for supremacy, but neither of them have a clear advantage. You'll see that trigger lines don't agree, maybe with each other or with the trend. And this is kind of a transition look. And if you are committed to having rule number one in place, to having those strong trigger lines, it kind of kills the temptation to predict what the market's going to do. One of the hardest things for those of us that are all so darn smart to come to terms with is that we don't control the market, and the market couldn't care less about what we want or hope, which is why we recognize the patterns that produce an advantage. So, guys, that's rule number one. This is your odds favorable momentum. Momentum is going to fix mistakes. I love that phrase because it really does. When that market has odds favorable momentum, sure enough, it continues to push. When those triggers weaken, let's just open crude up. We get a push back. Weak triggers, we get a push back. Odds favorable, the market continues in the direction of the trend. Weak triggers, there's a push back. So what I want you guys to do is brand new is just go back and look at how many times strong triggers continued off to the next key area. How many times strong triggers continue to the next key area, and how often those weak triggers create a reversal. And what you're doing is you're creating trust. You are creating trust in the idea that momentum is key to setting you up to look for a clear path. And what does a clear path mean? It means that there's nothing in your way. It's really pretty simple. There's a lot of lines on your chart, guys. Don't trade into them. The lines that we look for, and we're going to determine whether or not they're likely to stop the market, whether they have reversed the market, or whether they're going to create those moments of indecision, guys. This is where the people that move the market buy, sell, and fight. And it happens at divergence high and divergence low lines. Divergence is a fancy word that means loss of momentum. So anytime you see a magenta line print from a pivot, market goes up to down, this magenta line lets you know that there's a loss of momentum. That's it. It's really that simple. Momentum doesn't follow price. Market goes down, goes up, cyan line prints. This divergence low lets me know that there was a loss of momentum when this pivot was formed. This isn't a termination condition. This on its own isn't the potential to stop the market. It's when price reaches these areas. And we're also going to look for red Fibonacci resistance, blue Fibonacci support, and these yellow one-to-ones. So these are the areas that may stop the market. These are the areas that may take away your clear path. And they have the potential to be termination conditions. Oh my gosh. So to determine a termination condition, I say that every day and I always stop myself short. It's a two-part process, guys. I'm going to show you terminations at a high. There's a two-part process. Price reaches an area is the first part. This is the first piece of the puzzle. When I say price reaches an area, I mean these dynamic Renko bars. This is nothing more than a reflection of price on your large chart. If they reach Fibonacci resistance, yellow one-to-ones, or one of those divergence lines, all you have to do is ask yourself, where are my triggers? And right now you're asking yourself, where's Mark? He just got booted out of the classroom, and we're scared and alone, and there might be wolves. I'm on my way back, guys. Nobody panic. Here I come. Discord likes to do that to me every now and then. And I'm back. Do you guys have me? Back in business? Awesome. Cool. Two-part process, guys. All you have to do, price reaches the area. If the triggers remain below, no more long trades. Let it be that simple. And then the flip side of that is at a low. If price reaches one of those areas, support, one-to-ones, divergence lows, and your trigger lines remain above, guys, no more short trades into that area. And it really can be that simple. This is the recipe for termination conditions. Price reaches. If the triggers remain below from a high or above from a low, sit on your hands. The market is either going to break the area or the market's going to reverse at the area, or it's going to create moments of indecision that become untradeable. And we just never know what's going to happen. So embracing the idea that when price reaches an area and none of the triggers get through, just sit on your hands, guys. Be patient. Rule number 2 is not met. This will keep you out of consolidating markets. This will keep you from trading into areas that are likely to create a bounce or reverse. And this really is a huge safeguard. And this was my weak point as a brand new trader, as I love trading into termination conditions. The idea is that we should wait for a clear path. And all a clear path means is that price hasn't reached an area yet. But not only that, both small and large triggers have cleared the preceding area. So in this case, price reaches Fibonacci support. None of my triggers have broken through. Hopefully you can all see this at the top. I'm on my hands and I'm just waiting. I'm saying to myself, I don't know what's going to happen, so I'm going to let the area break. And the area is considered broken when both the small triggers and the large triggers get to the other side. And when this happens, I now have a clear path. I now have room to my targets. I also have odds favorable momentum. Don't apologize at all, Chris. And there's one of those pullbacks. So Chris, let's go through and let's define some stuff. It'll make it easier for you. The parts on your chart, the trigger lines, are these dashed lines and these solid green lines. And let me go back to a picture that's just triggers. Here, watch this. Your trigger lines are the momentum indicator. So if I only put trigger lines on the chart, and this is exactly what this class is for. These are your T3 trigger lines, the dashed lines and the solid lines. When there's separation between the two, the momentum is strongest. When they return inside of the triggers, the momentum is weaker and we may get that bounce. So far, so good? So when the trigger lines are their absolute strongest, Chris, the tails that I'm talking about are these little wicks on a chart. Right there. You're going to be able to pinpoint the bottom of this tail, but you're going to do it using a smaller, faster chart. And let me show you the refinement process. I'm going to draw a square around this one bar on my large chart with odds favorable momentum where one of those tails happened. And if I go back to my smaller, faster chart, if I can find my smaller, faster chart, look at all of the bars on this smaller, faster chart that happen in one bar on the large chart. This is why we use two charts. The large chart says up with a green background. The large chart says odds favorable momentum because of the separation in the triggers. The large chart had a clear path, and that's what we're talking about right now. There's no lines in the way to create a bounce. So we use that refinement process, this pullback from the top of it on your small chart to the base of it, the bottom of it on your small chart. Notice how that lines up perfectly with the size of the tail. So when the conditions are right, we're going to buy pullbacks, and that's the right condition. And right now, all we're doing is we're piecing it all together. Isn't it awesome? And it repeats itself every day, man. Every day. But we've got to piece it together. I very much teach in a foundational approach. We're going to learn one thing and go to the next. And right now, when we have odds favorable momentum and the small and the large have cleared the area, we have rules 1 and 2 met. We have odds favorable and we have a clear path. And check it out, Chris. There's one of those tails. Notice how it pulls right back to Fibonacci resistance that used to be support. You're going to be able to pinpoint an entry right there. Nope, these represent price. So this tail goes from 53.62 all the way down to 53.34. Those are just fluctuations in price. That's all the price bars represent, is the price in the market. So when price pushes all the way to Fibonacci resistance, let's take some pictures of pictures. I love having new students that are willing to ask questions. So thank you, Chris. When the buyers are in control and price is pushing up and it reaches Fibonacci resistance, all you have to do is ask yourself, where are my trigger lines? They're all below, so no more trades into that area. That's it. It's really that simple. You no longer have the advantage of a clear path. And you have to wait to see what the reaction is going to be. This case, the reaction pushed price, the price bars, all the way down to Fibonacci support. And once again, the trigger lines remain above. 90% of your day is spent reading indicators. 10% is going to be hopping on those advantages when they're present. And this is how rule number 2 keeps you out of a market that's consolidating. Notice that from support, price returns to Fibonacci resistance. Decisions are made at these key areas. Your trigger lines remain below resistance. That's a termination condition. It remains below that divergence high line. That's also a termination condition. And then it remains below that second area. Three terminations in the same area. And ultimately, this is what reverses the market. Notice how the large triggers go from green to red. Small triggers end up outside of the large triggers, and we haven't reached Fibonacci support. Chris, once again, this tail, whoops, wrong one. This tail is where Nexgen users capitalize on the advantages. 90% of the time was waiting for these to come to fruition, and then once they do, you're going to develop the trust to be able to hop in and take this trade without fear or hesitation. This particular termination condition, when it reaches a divergence high and then trades back below, this is what we call a pivot stop out. And you'll also see them at lows. The loss of momentum creates this divergence line, but that's not a termination. It's when price reaches the area, the trigger lines remain above. Now I have a termination condition. And when a termination condition reverses the market, this is what we'll call a strong bottom. When this termination condition reverses the market, this is what we'll call a strong top. And this is the precursor for the highest probability trend trade that you could ever take. And then here's just one more great example that kind of pieces a few different concepts together. We start with odds favorable momentum, and the sellers are in control. Whoops. And they are pushing price. They're pushing, they're pushing, they're pushing. The momentum is amazing. And Nexgen users are looking for opportunities for shorts right up until price reaches these yellow 1-to-1s. And when it does, every one of you asked yourself where the triggers were, and you said, well, they all remain above these 1-to-1s. I'm not going to go short. I'm not going to hope, wish, want. I can recognize that this is where a fight is going to happen, and I'm going to stay out of that fight. And thank goodness that you did, because look, the buyers pushed up. Notice that they hit resistance and all the triggers remain below. Technically, that's a termination condition. And then the sellers fight back and they push down and they can't get to where they once were. And then the buyers try it again and the sellers try it again and the buyers try it again. And Chris, this is your 90%. This is where you know without question that your advantages aren't in place. And this is your 90%. This is sitting on your hands waiting for them to duke it out. Ultimately, the buyers push and they create odds favorable momentum. And notice that small and large are above resistance. It's now behaving as support. We hadn't reached another area, so now we have a clear path. Rules 1 and 2 are met. And then once again, there's that tail, Chris. This is where you took your long trade, and with all that momentum coming from a termination condition, you grabbed it and took it all the way to Fibonacci resistance. You reached your goal for the day, and now you're going to the golf course. 90% of what you do is reading your indicators. This is the 10% that yields results. And it just all revolves around advantages. That's all it is. And then I'm going to talk about one more termination condition. The first set that we talked about requires a line. It requires a divergence high or yellow one-to-ones, resistance, support. It relies on price reaching the line. This final termination condition is going to take advantage of that smaller, faster chart, and it's going to let you see change happening on a large chart, on that slow chart, by using the small chart. Because sometimes you have a clear path in a downtrend and everything says down, and the market seems to turn without warning. And on the large chart, you may even have odds favorable momentum. You haven't reached Fibonacci resistance. And once again, that market just kind of turns. On a large chart, you're not going to see that happening. But on a small chart, you can use three divergences in the same price range, three losses of momentum in the same price range on a smaller, faster chart. Guys, that can end the trend. It can create a bigger push the opposite direction. But what it is for us is it's a safeguard. It says, hey, no more short trades into this area. Three divergence have printed, the market may push up. And this is a termination condition, the only termination condition that I respect on a small chart. You'll see the same thing from a high. And this becomes more powerful if we go back to that strong trigger lesson. When your small triggers work their way inside of the large triggers, we have an anything can happen scenario. So now we have three divergences, three losses of momentum along with weak triggers, and it becomes more powerful. And then it gets more powerful still when that third pivot is higher than the previous. It can't even reach the previous push, and we're losing momentum. This head and shoulders pattern adds a little strength to it. You see it at the top as well. But you're going to see this look, three divergences from a low or three divergences from a high, when that large chart seems to be changing direction. And it's going to help you take advantage of not taking that final short or long, but also if you did take that perfect short, three divergences print, you're going to be able to use your chart reading to manage out of these trades, to give yourself the advantage of knowing that things may be changing, taking profits, getting out, and waiting for the best of the best. So that's termination conditions, guys. That's rule number two. When there are no termination conditions and there's room to profit targets, you have a clear path. And if you couple that with odds favorable momentum, then it's time to turn your attention to the smaller, faster chart. Rule number three says that we're going to use a limit order because we're going to pinpoint where that market is likely to continue. We're going to use a limit order to buy or sell a pullback, which means a small retracement in price that's counter to the underlying trend. That means that if everything is screaming to the upside, we're going to enter the market when that smaller chart's on its way down and vice versa. And we're going to have that limit order waiting at areas, lines. Once again, guys, we trade from lines because lines have power, but they're going to be inside of favorable large triggers. And when you use those two charts, the large crowd, the people in charge, say that the market is going up. They say that we have odds favorable momentum, that there's nothing in the way. There's those tails again, Chris, but we don't trade these. We're going to use this refinement chart, and we're going to wait for a pushback. Let the small crowd fight the large crowd. And we're going to wait for them to hit a line inside of favorable large triggers, and we're going to wait for them with a limit order. So we're going to go over how to get this entry. We're going to go through and do it bar by bar, but I'm going to start with just defining favorable large triggers. Favorable, you hear that a lot because everything we do provides a statistical advantage. Favorable large triggers means that your dash triggers, the large triggers on your 5-1 chart, are working harmoniously with what we call the synthetic triggers, which are these ones that have little steps. These step triggers are nothing more than the large triggers from your big time frame. That's it. But when they're one on top of the other, when they're wide and angled in the direction of the trend, it looks like two snakes riding piggyback. This is what we call favorable large triggers. And when I have favorable large triggers in areas within them, it's going to create the smallest possible window of opportunity, the smallest point where the market is likely to continue. And that's going to allow you to have the absolute least amount of risk. And that's really what we want. We want to manage our risk before we ever manage our profits. So when the large chart says up, the large chart says odds favorable momentum, the large chart has a clear path, we're going to turn our attention to the small chart because it's time to look for an entry. We're going to identify those favorable large triggers coming up, wide, one on top of the other. We're going to begin to look at what areas are falling within them. High probability trend trades happen from fibs, mid bands, or yellow one-to-ones, but the key is that they're nestled inside of those trigger lines. So with everything up, we've identified our entry, we've identified our triggers. It's not time to enter yet. We need the small crowd to do their thing. We need them to push back to our best of the best area, and that's going to begin with a reversal bar. This red bar after all of the green bars, or if we're looking for a short trade, it'll be a green bar after all of the red bars. But this signals the beginning of the pullback. Time to focus on your entry areas. So for a long trade, we're going to identify our highest point of support, in this case a midband, to our lowest point of support, yellow one-to-ones, inside of favorable large triggers. That is your window of opportunity. This becomes the point where the market is most likely to bounce. All you have to do is activate a limit order right at the top. Right click on your chart. I'm going to enter the market at 79.21, a tick above support, if the market comes back to me. And if it does, you're in a long position, and you're in that long position with the advantage of momentum dictated by strong triggers on the large chart. You have absolutely nothing in your way because there's no termination conditions on the large chart. And now you have the advantage of an entry area, getting into the market where it's most likely to continue because you were smart enough to wait for the pullback to the area inside of favorable large triggers on that smaller, faster chart. This is your high probability trend trade entry. This is your first couple weeks with Nexgen, guys. Being able to identify the advantages on the large chart, strong triggers, absolutely nothing in the way, waiting for the reversal bar, and then at the time of the reversal bar, looking from the top of favorable large triggers to the bottom of favorable large triggers. This is not your window. That's huge. We are going to refine it. Get over here. From the highest point of support to the lowest point of support inside of favorable large triggers. And this is the point where the market is most likely to bounce in the direction of the trend. Is everybody comfortable with me right here? Chris, how you feeling? First day, it's like drinking from a fire hose, brother. But we're going to get you. That market comes back and smacks into your limit order. Boom, you're in that long position. But remember, we created a window. We did not create an exact point. Fire away, chef. Which means that it may go to the bottom of that window. You may end up bouncing off that lowest point of support. Whoops, that's not what I wanted to do. There we go. And that's okay because we're still inside of the window. But what we were able to do, because we can identify where it's likely to continue, we can also identify where that market shouldn't go. And that's 4 or 5 ticks outside of that window, beyond those large triggers. So, chef, let's do 2 boxes then. From the top of the triggers to the bottom of the triggers. There we go, right there. Do you see that green line down there a little bit? So this line represents the highest point of the triggers. This line represents the lowest point of the triggers. And that's where I'm looking for the areas to fall in. Does that make sense? Awesome. That's a great question. We'll go through it a couple times, Chef, to make sure. Let me talk about stop placement real quick. Understanding that if the market extends beyond this window, we're going to wait with a stop, guys. We're going to wait with a protective stop, and we're going to exit this position, and we're going to take a loser. Oh, very cool. I don't know anything about the Tim Sykes program. And Chris, my admission to everybody is I'm not a tech guy, but I'm a pretty good chart reader. And patterns make sense to me. And that's all this is. It's just patterns. And it's minimal too. It's strong triggers and nothing in the way and just getting in at the right spot. And then rinse and repeat each and every day. Because it happens over and over and over again. But we put the stop in place because it's important to understand, and you have experience in the market, you know this. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time, right? It's a cost of doing business. Oh, it's just not helpful. And everybody's brain is different, right? But Chris, I'm never going to tell you that you're going to take 100% winners. I'm never going to tell you that you won't lose trades, but I will tell you that you'll be able to manage them for smaller losses because you understand where the market's likely to continue. And this entry becomes an entry that you're going to take every time it sets up with those advantages because this is the one that 70 to 80% of the time you're going to reach that profit target. And this becomes your foundation, and this is creating confidence through the memory of success. And let's go do an entry together because I know that we had one in crude oil, right? Uh, I completely rebuilt all of my charts today too, guys, this morning. I cleaned it out, gave it a full enema, and came back to it. So we're going to do a bar by bar, and Chef, this will help you as well. We're going to do an entry, and we're going to follow the rules 100%, and we're going to make sure that we're doing everything the way that it can be done. So I'm going to set up the large chart, and I'm not going to give us the advantage of a tail, Chris. Um, we're going to go through it, and we're going to look at it just like this. The first thing that we identify, and I'm going to walk through my process for identifying a high probability trend trade. The first thing that I do is I say to myself, what direction's the market going? Well, it's a green background. So I know that the market's going up. If you're colorblind, and I've had this happen, which is why I say it. When your small triggers break above large triggers, that's what paints the background. So the only way you could ever have odds favorable momentum is if you're trading with the trend. It's impossible to have it without. When the small triggers break below the large, it paints the background red. So the trend is up, and then my smalls are above the large. Both are wide, angled in the direction of the trend. Everybody give me a Y in the room if you're working on this and you recognize this is, in fact, odds favorable momentum. This is a market that's likely to continue in the direction of the trend, dictated by the large chart. And then the second thing that I'm looking for is I'm looking for the top of price wherever it's trading, and I'm making sure that I have not hit a line, that I haven't hit a fib, I haven't hit yellow one-to-ones, I haven't hit a divergence high. I have a clear path. Is everybody comfortable with that idea? The large chart says up. The large chart says odds favorable momentum. The large chart says a clear path. Watch this. Done. What does the small chart say? The small chart says up. My large triggers and my synthetic triggers are angled up. Everything says up, but I need the small crowd. I need those fighters to start their fight. So with everything going up, I need a reversal bar. And there it is. So Chef, do it with me. At the time of the reversal bar, I'm going to draw a box, either in my head or just physically. And I'm going to identify the top of the trigger lines to the bottom of the trigger lines. This is where I'm looking for areas. Everybody good so far? Both working together. Absolutely, Chef. They are favorable when they're one on top of the other. And I'm looking for the areas inside. What's the flip side? We talked about it with momentum. If favorable large triggers are one on top of the other, what takes away the advantage? Split triggers. There's favorable one on top of the other. You know where it's likely to continue. Chef, check it out. When they're split, when they're wide, you still have to look from the top to the bottom. Look at how ginormous that window of opportunity becomes. So this is why the tighter they are on top of each other, the smaller the window of opportunity. So from the bottom of the triggers to the top of the triggers. And then watch this. Let's refine it even more. From the highest point of support, which happens to be that mid-band, to the lowest point of support, which happens to be Fibonacci support. Awesome, Chef. Light bulbs are what it's all about. This becomes the point where the market is most likely to continue. Is everybody with me? This is your window of opportunity. Your job as a rules-based trader trading this high probability trend trade is a tick or two above that highest point of support. This yellow line represents my limit order. At the time of the reversal bar, I already know where I want to get into the market, right here at 83.09. And now there's nothing for me to do. The market comes down and I hope it gets there. Whoa, what did I do? Whoops, we cheated. It comes down, it comes down. Notice that that mid band is coming up a little bit. It's okay to adjust your limit order a tick or two above. And the market comes down, and guys, you're in a long position. You're in a position with the advantage of momentum. So let's tie it together, right? You're in a position with the advantage of momentum. You're in a position with the advantage of a clear path. And now there's nothing for you to do. You've entered the trade with every advantage, and your protective stop is going to go outside of that window of opportunity. In this case, it looks like it's about 12 ticks. The lower area is the fib, Alex. So anytime we talk about lines to trade from, we're talking about fibs, mid bands, yellow 1-to-1s. That's it. And that was horrible spelling, and I apologize for that. Fibs, mid bands, yellow 1-to-1s inside of favorable large triggers. Stops in place. We'll make it stoppy color if you want. Salmon. You're welcome, Alex. Keep asking questions. We're in the market, and there's another down bar, but we're still in the window, guys. And there's another down bar, but we're still in the window. Don't panic. Smaller, faster chart, right? Holy smokes, it made it to the lower point of support. Again. And then it gives us one of those magical reversal bars, guys. Now the market is trading in the direction of the trend, in the direction of the momentum, in the direction of the clear path. And now we're going to manage our risk even further. I'm going to go 2 ticks below that reversal bar, which means that I now have 7 ticks of risk on this trade. And off it goes. Guys, this is the entry for the high probability trend trade. This is something that you can study. Watch this, Chris. I'm going to put it right around our entry, and I'm going to click the large chart, 1 bar. Boom. There's your tail. We don't trade tails. We trade pullbacks to areas inside of favorable large triggers. Does that make sense, everybody? This is your high probability trend trade. This is your first couple weeks, guys. Focus on the best of the best entries because it creates manageable trades. Getting in at the best spot creates manageable trades. And the cool thing is you can scroll back and look for odds favorable momentum. Circle a tail. What's it look like? I'm not sure. Holy smokes. It was a pullback to support right inside of triggers. The previous one was too. Does it happen more than once a day? So guys, this is your study. We don't trade the tails, we trade the pullbacks. But what we can do is we can circle the tails with that odds favorable momentum, and we can see that it lines up with areas inside. Take a picture, develop the trust. Price reach resistance, weak triggers, none through. Notice how it reverses the market. Chris, I do the same thing every day. Kid you not. Every day I talk about advantages. Every day I show you how to study them. And this is really the first hour of class. And when you take this first hour of class and you commit it to memory, dang it, there it is again. You're creating trust. Take these pictures, get them into your spreadsheet, learn how to enter the market at the absolute best of the best spot. And I'm going to give you some tools to do it. I'm going to give you a high probability trend trade checklist. This is for everybody. This is just the advantages laid out on a checklist so that you can make sure that they have come to fruition before you enter the trade. In order to enter the trade, these rules must be met. I've never had anybody in the history of Nexgen follow this rule to the letter or follow this checklist, have a termination that creates a full reversal, odds favorable, nothing in the way in an area, and do worse than 70%. And if your goal is really to get paid, guys, this may be all you need if you're patient. I've taken the exact same checklist and I've put pictures in so that you can identify the momentum or the lack thereof. You know when the path is clear and when it's not. And then you also understand how to identify that window of opportunity. Chef, this is a good one for you as well. I think not just you, but everybody. Notice how this one circles from the top of the triggers to the bottom of the triggers and looks for the areas inside. Guys, this is how you define that window. This is how you get that great entry. This is how you have the advantage of getting in where the market is most likely to continue. And guys, this is your first 20 days with Nexgen, defining your entries. Absolutely, Cav, use it. And then let me take it one step further for you. The checklist is great, right? The checklist defines your entry. Eventually, you're going to have to do something with that entry, guys, and you're going to have to write a plan that suits your needs. And here's the disclaimer. And this disclaimer is very important today with my brother coming in to teach the class on Friday. Guys, this super high probability basic approach is a stepping stone. This opens the door for you to go find the best of the best, to find the patterns that suit your needs. But it's designed to optimize your chances of success with a high probability trend trade and what we call a 50-50 trade. And that 50-50 trade is when we're using momentum to let us know that an area may break based on all that momentum. And that's when your small triggers smash through an area, but your large triggers haven't made it, so the path isn't clear. And that 50-50 trade just means 50% of your triggers are through and 50% are not. And if the path isn't clear, then only 2 out of 3 get met, which means that it becomes a medium probability trade, and your ability to read charts is going to allow you to manage that. So this is designed to optimize your chances of success, but it's through simulation, through study, through class feedback, and continuous practice. Man, that's how you're going to create that plan that suits your needs. That's how you're going to catch those trades that make you feel giddy and happy and that they're easy and effortless for you, because you're going to recognize your patterns through study. You're going to recognize your patterns through feedback, through practice, through simulation, through filling out your spreadsheet. And that's what's going to get you where you want to be. That's what's going to get you to that next level. But your simple plan for consistency as a brand new user revolves around determining the entry for the high probability trend trade. It revolves around being able to get in at the best of the best spot. And that's what this checklist does for you. That's what this plan does for you. It gets you into the market at the highest probability zone. And then once you get in and you're good at these entries, and I really tell people, spend 20 days focusing on nothing but entries. Try not to give two craps about whether or not it wins or loses. Just getting in at the right spot creates those advantages. Eventually, you're going to manage it. So the same way that you take that super pragmatic entry, that super methodical, mechanical, checklist-based entry, you can begin to manage very pragmatically as well. And it all revolves around the perfect entry. So don't bypass this step. Once you're in at the right spot and your stop is where the market shouldn't go, there's absolutely nothing for you to do. And I want you to embrace that idea. I want you to keep the emotion out of it. And I want you to say it's either going to hit my stop, that's cool, I had the advantages, or it's going to give me a reversal bar. And if it gives you the reversal bar in the direction of the trade, you're going to reduce your risk from that outside of the window of opportunity, 12 to 14 ticks typically, to maybe 7 or 8 above that reversal bar. You're managing your risk before you ever manage your profit. Once again, there's just not a thing for you to do. You're either going to be stopped out for a small loss. It's a normal part of a positive equity curve. Or it's going to hit your first target. And this first target is not designed to make you a rich man. This first target, or woman, forgive me, is designed to create confidence through the memory of success. Did it go nuts, Chef? That's why I don't trade into news. You guys do whatever the hell you want. I will not trade into news. But you know what's cool is even in news, do you guys ever notice that the patterns still work? Even when news prints, terminations are still terminations. Three divergences still pushes it lower. Isn't that outstanding, guys? Best freaking software in the world. Triple dog dare you to find something better. We're going to manage our trade. We are going to hit $100, going to take that contract off. We're going to have a target waiting for it. Going to get confidence through the memory of success. Guys, when you get paid in a trade, it feels good. Your serotonin cranks. Dopamine is full tilt boogie. Children sing songs about you, and you're going to move your stop to break even. So not only are you $100 wealthier, you've got no risk. Guys, a break even stop isn't your best stop. I'm going to say that right now. But as a brand new user, it's going to help you develop trust that it was the large chart that had you looking for the entry, that it was the large chart that gave you the advantage. Show me a picture, Cav. Tell me why you think it's in consolidation. Guys, I love your predictions and I love your chart reads, but without a picture, it has zero educational value. Help me out with that. Show me a picture. Show me some termination conditions holding. This break-even stop helps you trust the large chart to get you to the next area. It makes it easier to sit on your hands and do nothing to see if it gets hit. And if it does get hit, you exit no matter what might happen next, guys. And that is a $300 trade on 2 contracts. And it all starts with a great entry. And Chris, this is what I'm going to talk about every day. I'm going to talk about the best of the best. I'm going to talk about the advantages. I'm going to talk about there is zero consolidation happening on a large chart, Cav, and let me tell you why. Are you ready? You, my friend, are looking at a small chart. What's your large chart say? All of that nonsense on the small chart is just a little bit on the large chart, right? All of that shenanigans on a small chart, all of these fluctuations, large chart hasn't reached a fib. The triggers have cleared the fib. The momentum is down. The trend is down. Man, let me show you what consolidation looks like, Cav. I'm glad you put that. Thank you for putting that. I'm going to show you what consolidation looks like because I know that we had some recently. There you go, brother. Check it out. When resistance goes to support to resistance to support to resistance to support to resistance to support to resistance, and then finally breaks out, rule number 2 identifies consolidation. Oh my gosh, and look at it. Rule number 2 never met. There's that 90%, guys. What we have right now, Cav, is we have a market that's trying to push down, but there's some buyers testing the water. Did we have a trade? Odds favorable, everything down, pull back to resistance inside of favorable large triggers. We had an entry. You guys got $100 on it, maybe got stopped out break even, and then a little bit of consolidation around these key areas. This is where decisions happen. Yeah, these are fluctuations, right? And you notice that they happen right at fibs. Oh, absolutely, Chris. And then Cav, there we go, brother. Momentum, direction, wins. Large chart wins. Right to the key Fibonacci area. What you were witnessing was the buyers testing the water. That's all it was. But the large chart leads the way. Odds favorable momentum. Support becomes resistance when it breaks. There's your tail. Everything agrees. Take that thing short. Man, thank you for saying that. But it reminds us that the large chart talks about what they want to have happen. The large chart tells you that the trend is down. The large chart identifies the momentum, and sure enough, off it goes. I love it. The same way it did it here. But you'll see these fluctuations. Man, they will drive you nuts. They will drive you nuts. Termination to termination. 90% of your day, guys, is spent reading your indicators, waiting for advantages. So that's the first hour. Welcome to Nexgen, Chris. I'm looking, do I have any other newer folks in here? This is the first hour, and we do this really every day, Monday through Friday, 5 days a week. Absolutely, man. Guys, I'm telling you, the more you talk in class, the better this class is. I am not nearly as smart as I give off. And you guys drive the class. You guys let me know what to talk about. You guys let me know what you need help with. The first hour lays a foundation. The first hour gives you the opportunity to understand some very simple advantages that'll take you to the next level. The next couple hours are going to be spent looking at your charts. So we're going to look at what you guys did. Absolutely. So Steve B, it's a 34.5 and a 13.2 on the NASDAQ. Whoop, I didn't really get my numbers right. But there's more to it, man. The large chart rules are the same on the NASDAQ, very much. But there are some idiosyncrasies that go with the NASDAQ, and there's some things that I can help you with as you go through and learn it. And a lot of those things I put on my spreadsheet, and we can talk about it today for sure. But check out the yellow section on my spreadsheet about NASDAQ. The rules are the same, but the entries have a little bit different, and it is extremely fast, not for beginners at all. You have to have that foundation to be successful with it. And then, does anybody else love Fibonacci? Resistance holds per the rules. Look at the bounce support just caused. It may still go down because of a good top, but we'll see if it fluctuates a little bit. So Steve, ask a million questions, please. And there should be, are you on 8 or 7? NinjaTrader 8 or 7? If you're on 8, there's NASDAQ workspaces in here. So you don't even really have to worry about it. If you want, you can reload your indicators and you'll have all the NASDAQ workspaces, and you'll also have ATM templates for them. Stops and targets. The 24 ticks is the typical stop for the NASDAQ, which sounds like a lot, but it's only 120 bucks. It's the same as 12 ticks on crude oil, but because NASDAQ swings in smaller increments, it takes a little more reaction time to get in there. I definitely don't mind talking about the NASDAQ. So guys, here we don't have the strongest triggers, but we do have a clear path, and we have an entry area, which means I'm in a medium probability scenario. Without the advantage of momentum, but with a clear path, all my triggers are below resistance. I have an area inside of favorable large triggers. I can identify where that market is likely to continue, and I can take a small risk shot at it if I decide that I want to. But it's not high probability because look. Oh, so you're trying to add them to your ES chart on 8? Man, what I do, Steve, and this is just me, is I'll build a separate workspace, and Shift F3 will toggle me in between the workspaces, and I think it's easier than those little tabs. Rather than adding them, you either need to build them or you need to just run the indicators. Yeah, I think that's easier. I don't like the little toggle tabs, personally, but that's just me. And guys, crude oil inventories are in 20 minutes. Look at how the loss of momentum pushes it up. Golly, we see that a lot, don't we? Weak triggers, bigger pushes. Weak triggers, bigger pushes. Weak triggers, bigger pushes. It's fun. I do love watching a market, guys, and I do love helping you out, but I also love stretching my legs. So what I'm going to do real quick is I'm going to take a break. I'm going to run a lap. When I come back, we're going to look at your charts. We're going to relay them back to advantages. If you have a question, post it in the room. And then, Cav, you're going to lose some, right? And just what we talked about, what was the disadvantage going into that trade? I noticed that you don't annotate your charts a lot. What if you drop these words on every trade that you took to determine what was great and what wasn't? Exactly, loss of momentum, right? Get in the habit, Cav, because I'm going to tell you from experience, if you go back and look at what you did today on annotated charts and you look at it tomorrow morning, you're going to be a better trader if you take that little bit of effort going into it. Look at that termination condition holding. Look at that termination condition holding. Dag nabbit. All right, guys, I'm going to take a few minutes. When I come back, we're going to look at all your charts. When I look at charts in the room, oh, no worries, man. I'm here to bug the ever-loving crap out of you until you have good habits. So you're stuck with me. I don't quit people. When I come back and I talk about your charts, I'm going to go back to momentum, a clear path, and entry area every time. You're going to see trades in this room that are not high probability trend trades. You're going to see trades in this room that are not even medium probability trend trades. Sometimes they're just trades that people made up based on their ability to read indicators, but I'm still going to revolve back to advantages and disadvantages. Guys, there are going to be times when I hurt your feelings. I'm going to let you know right now. You're going to take this short into support, and I'm going to say, damn it, Cav, you traded directly into a termination condition. What was the expectation? And Cav's going to be like, man, he didn't have to tell me that I broke a rule, but I've got to tell you that you broke a rule because my goal is to keep you safe. I'm like a parent, you're my kids, and I don't want you putting forks in the outlet. So I will tell you what is amazing about your charts, and we'll celebrate every victory, but we're also going to talk about what wasn't so great so that we can get rid of that and make you guys successful. I'll be back in 5 minutes. Post your pictures, ask your questions. When I come back, we will rock it out and look at your pictures. Back in 5, guys. I'm having too much fun to take a long break. So, um, Chris, I'm gonna try not to hurt feelings. I really try not to. I'm the biggest hippie ever. Check it out. Termination condition created a full reversal. Full reversal's given me odds favorable momentum. I've already gotten my reversal bar. I have already looked from my top of the large to the bottom. And guys, that's pretty much the window of opportunity right there. Um, as per the rules. Reminder, I don't call trades. I have never called trades, but what I will do is I'll talk about whether or not the rules are met because that's kind of my job. I'm going to scroll to the top. This is me scrolling to the top right now. So what I'm going to do is I'm going to get to the top of the room and I'm going to start looking at the pictures that you guys posted. And I'm going to talk about the advantages that were there, the disadvantages that may have been present. I'm not going to judge you as a human being based on your success. What I am going to do is revolve around advantages and see what happened. Here's our first one. This is Safia. And Safia has a termination condition that creates a full reversal. And from that full reversal, she likes a momentum style entry. And she's able to take profits at the key area that's likely to hold the market. And then when it does and creates a pivot stop out, she lets the immediate momentum. This one's a little early for you, Safia. And she takes it right up to the problem area. And guys, this is a prime example of taking your study, taking your ability to read charts, taking all of the efforts that you put into being a student and turning it into patterns that suit your needs, turning into patterns that make you comfortable and that make you confident, because that's the goal, right? When you believe in a methodology, it's easy to execute. Ron loves momentum and a clear path, and when he has it, he takes snippets and he's just simming around over coffee. But the market's moving well, and then he comes in and takes the exact same trade. Everything says up, clears trouble, gets in, gets out. What a great way to make some money to get the day going. Nice trade, Ron. Gary comes in and says that when a termination creates a full reversal, this is what we call a show-off trade. When he doesn't give any information, he just says, look at all the money that I made. Pff, I would too. Beautiful. And I can tell you guys that this one came from a termination and it pulled back to an area inside of favorable large triggers and it rocked it all the way up because I took the same darn trade. Gary, I think I got in just a little bit lower than you though. Not that it's a competition. And then Joel, everything says up. The market pulls back to support inside of favorable large triggers. It makes you sweat for a second, and then it cranks all the way up to Fibonacci resistance with all of that momentum. So we see high probability trend trades, right? We see taking advantage of momentum in a clear path trades. We see beautiful pullback to areas inside of favorable large trigger trades. This is what we do, guys. This is y'all showing me what you can do with the software because you've created a foundation because you understand the advantages and what it's going to take to get you in. And I love it. I love watching you guys do this stuff. Safia, termination condition comes all the way back to the mid band. The large triggers don't follow. So when it starts to roll, looks like you ride it. Oh, nope, you're in. When the small triggers come up, the large triggers stay above. You're getting in, getting out. That one's a little harder for me to read, Safia. I understand the whys. I don't get the timing quite as well. And I know that you have reasons on that one. Nice job. All right. Cav, everything says down and you go short and make some money. I like it. Man, Cav, I'd love to see your large chart too. Are you comfortable posting up that large chart along with the small? Do you know how to do that? If not, I'd love to go through a little tutorial. You do now? Okay, cool. Guys, just a reminder, show me both. Give me the large and the small, right? Let's see what's happening on the large because sometimes that's where the challenges with trades happen. And then make sure that we line it up with the small. Um, but it looks like everything is down and you pull back to resistance inside of favorable large triggers. And sure enough, that market goes down. And there's those fluctuations, right? That's where we called consolidation, but it never said anything but down all the way. Just those little fluctuations. The large chart probably kept telling you, hey, we're going down. Just sit tight, man. Let it happen. Which is fun when that happens. I lost my place. Here we go. And guys, remember, even though I'm looking at Cav's chart or Sophia's chart, each and every chart that's presented in the room, you're welcome to ask questions about. If it's a methodology that is not a high probability trend trade, I'll do my best to give you the chart read. For example, when the area never breaks, when both trigger lines don't get through, Sophia knows that this creates a challenge, especially when divergence prints from the bottom. All of her small triggers come up with aggression, and she takes a little pullback with that immediate momentum to get up to the next area. Just a little snippet, grabbing a little bit of cash. And I know that she has a chart over here that she looks for a little confirmation. Beautiful read. Sophia, you and my brother are very similar. And then this is Gary. Gary says, with odds favorable and a clear path and it pulls back to support, why not get paid? Beautiful trade, Gary. GWC, same thing. Everything says up. Ooh, hold on. You take the momentum style and get out. And then you take a momentum style again, and I don't disagree with it at all, GWC. But I do think you missed an opportunity on the trend trade when this one didn't work out. And you could have just taken that one up. And sometimes it's hard. It's hard to wrap your brain around. I'm doing this, and then I just got stopped out. Let me look at it real quick and see if there's another trade. There was a time in a different life where I used to race motorcycles, and there was a novice class and an expert class. And I was talking to an expert buddy of mine when I was a novice, and I was like, man, I'm almost as fast as you out here. And he goes, yeah, he goes, that's not the difference between a professional and a novice. The difference is how quickly you react and how quickly you recover from mistakes. And not that a loss is a mistake, but eventually your head's going to be in the game and you're going to realize that nothing's changed and you're going to be able to rock it up on that next one and take advantage. It's a great trade, GWC. Good luck. Then Sophia, just a Ron trade. Why did you say ugh? You had odds favorable, you had a clear path, and you just took a little snippet in between. Up, this one. Didn't wait for the pullback. I see what you're talking about. Didn't have all the momentum there, and sure enough, it was going to push a little lower. I see what you're talking about now. With the loss of momentum, it's likely to push lower. I love the first one, though, Sophia. Let me see where we're at here. All right, Cav, I got you again. Beautiful. Absolutely perfect. Isn't that the easy one? Isn't this the one that just, you're like, oh my gosh, I don't care if it loses. This one's effortless. Crude oil inventories in 3 minutes. Yeah, Alan, I really like trading after the release rather than before, personally. It is. John and I, we talk on Skype all the time, and we're both like, man, it's like stealing. If you have the patience to wait for the best look, it's like stealing. It really is. If you don't have the patience to wait for the best look, it's like getting robbed. Joel. Joel. I like this one. I love this trade. And it gave you a chance to get out. Things I wish I saw, Joel. I'm not sure why you talked yourself out of this one. That's the beauty. You have it circled. And then, Joel, this one's great. Beautiful entry, but it gave you the reversal bar, man. It gave you the reversal bar. You could have had 2 or 3 ticks of risk instead of getting popped for 7. Other than that, just beautiful. Nice job, Joel. Great trading. Sometimes we miss one. Triggers were better here than they were here, but your entry is like a sniper. And you should have had 3 or 4 ticks of risk on that one, right? Getting in at 24, you could have taken 100 and gone break even. No, that's okay. Well, I'm going to lift you back up because you could build a career around that entry, Joel. Outstanding entry. You could teach this class. I could give you a microphone. You could teach this class. That one didn't work out, so you're like, ha, pay me over here. And then it's that divergence on the 50-50, not from a good top. That's your exit condition, especially off those one-to-ones. No, you're good. You got it. That's a perfect entry. Didn't work. That's the perfect entry. Just got to not hope so much, I guess. Don't be afraid to get those quick profits, right? Don't be afraid to get to break even. But you're killing it, Joel. You're killing your entries. That's the first part. Once the entries come into place, man, everything else kind of starts to work its way out. Cav says, look at me. Boom, bang, bing. Cav, beautiful. Couldn't have done it any better. Jose, we all did. Jose, I think we all had that divergence. Did you choose not to take it because of it? And that's okay. But I think we all had that divergence there. Joel did. Did Cav have it? Yeah, everybody had it. I didn't. On crude, let's see. My charts are brand new. I gave my nope. I had it too. I rebuilt everything this morning. I deleted all of my workspaces. I deleted all of my templates. I reloaded new indicators. I'm as fresh as I can possibly be. Let's see where we're at. I lost my spot again, guys. Sorry. Bear with me. Dun, dun, dun. I can do this. Totally lost it. There we go. Did we get this one? Yeah, we sure did. Good one, Jose. Good one, Cab. We saw yours. You took that trade. It was Rockstar. Safia, let's see what you did. Jose, are you looking for reasons to win or reasons not to win? Um, Show me your pictures. I find it odd that the rules you showed me this one. What about this kept you out of the trade? Was it the termination that created the full reversal? You got to do more than just, you got to show me. We'll look. We'll take a look. Let's go to the next picture. Safia directly into a divergence high, 3 divergences in the same location. Safia says, you can't pay me to go long into that condition. I love it. Great heads up. GWC, termination. You tried the short into the termination, didn't work out. And then you go long when it rolls and starts to break, and that one worked out for you. GWC, are you comfortable with the gap theory? Price reaches support, large triggers don't follow, it's likely to close up to it. That's just a no short scenario there, my friend. And then Joel, we saw this one. Does it make sense? Cav, are you using Snagit or TechSmith Capture? We'll go through one real quick. Cool. So click the capture button. Are you comfortable getting to the actual picture where you have this? Okay, yeah. So call out button up top, left click on your chart and drag to the bottom right, and it'll give you a box, however big you need it. And then you'll see the cursor blinking. Go to town. Same thing with arrows. It's click and drag all the way across. Do call outs everywhere. We could do like a couple eyes and flat little mouth, right? He's angry. And then just hit copy. So vandalize it. Practice a couple. And guys, let's talk about the little phenomenon that was happening here. Yep, left click and drag. And that'll allow you to control the size of everything. So once you take the picture, let me make this bigger. If I left click on my chart and just drag it diagonally to the bottom right, as long as I'm holding down the mouse, and then when I release the mouse, that's what's going to give me my final size, and then I can adjust it too. Well, yeah, you have to take the picture first. Cool. Otherwise, there's nothing to draw on, right? Guys, I want to talk about this. Here, watch this. We'll use Capture to do this one. There's this awesome phenomenon called the gap theory. And we use it when price accelerates away from the large triggers and runs into something. In this case, it ran into Fibonacci support. In GWC, you don't appear to have any midbands on your chart, which is odd. When it reaches this area of support, notice how there's room for a full reversal bar back to the large triggers. This is what we call the gap theory. And the gap theory just simply states that if price accelerates away from the large triggers fast and far and runs into fibs or mid bands even, whoops, it tends to snap back to those triggers. So in this case, any shorts taken in that snapback range typically get run over. I took a trade yesterday where I traded against that GWC. I completely missed it, and I got run over quick. Happens sometimes. And then Cav, you took the short, right? Medium probability, great entry, outside of the window. If it worked off a resistance, it was going to the blue fib. It just chose not to work. That's a trade I probably would have taken as well. And then Joel, same one. Joel's been around long enough to know. You traded without momentum, but you had a clear path. You had an area inside of favorable large triggers. You took a calculated risk the same way Cav did, the same way I talked about in the room. It just didn't work. And you're coming from, look how it came back, tested resistance, nothing blinked. We're coming off resistance and pushing down. It just didn't get there. That happens sometimes. Here's a 50-50, no divergence. And once again, Joel, you took it at the best spot. If it's going to continue up, that's exactly where it's going from. It gave you a reversal bar so you could reduce risk. Perfect. And then once this divergence prints, that's your cue to exit. I think you're doing great. I really do. I think you're solid. But then it's divergence on that 50-50, and notice how it's not a good bottom, right? Not a termination condition that creates that full reversal. So if you take this shot, you've got to be ready to manage it. You got to be ready to manage it. Exactly. Weak bottom, and very often they'll finish that move down. So this short that didn't work, there's a good chance they're going to come back and try and continue it to get down to 82.45. Did they? Hell yeah, they did. Short didn't work, came up to resistance, and look at that. They finished their move right down to the fib. Isn't that awesome? We knew it was going short. They just had other plans until inventories came out. That's it. Now we have a termination that's created a full reversal. That full reversal is creating odds favorable momentum, and we're just waiting to see if it gives an opportunity. Guys, you're killing it today. Not every trade's going to work, and I'm going to tell you right now, in the calendar year, this is one of the tougher days. There's FOMC today, right? There's crude oil inventories today. There's a lot of challenges, a lot of indecision going on. And then GWC, when the 50-50 doesn't work, you're like, man, apology trade. And it pulls right back and you take the short. That's some heads up trading. Me too. Isn't that cool, GWC? You're like, okay, bad bottom, didn't work. Let's go short. Let's finish the move. I love that chart read. That's a little advanced. That's solid. All right, Jose, let's look at it. Odds favorable. No terminations. Jose, right into crude oil inventories. This had nothing to do with the rules not being met. Man, that's right into news. Big news for crude oil. All right. I got your timestamp at 27 prior to the entry, which means you're 2 to 3 minutes before, um, which is okay. 3 minutes, 5 minutes, 7 minutes, 10 minutes. You've been around long enough. And I know that I forget this a lot on crude oil. Fortunately, I'm teaching the class. They're jockeying for position until that thing is released. And look what the market's been doing. Bad bottom, couldn't make it to the top. Odds favorable. It was 100% the right look. It was 100% the right trade. There was just some indecision until they finally got that news out that they were waiting for. It did everything it said it was going to do, but that's where news released. Right there, unfortunately, right about the time of your trade, or close to it. I know it's frustrating, guys. It's frustrating to take losers. It's frustrating to feel like you can only catch losers. And one of the things that I do when I feel like I'm only catching losers is I always go back to the rules. I always go back to the rules. Am I following the rules? Do I have the advantages? Sometimes the answer is yes, and it's just a shitty day. Pardon my French. More often than not, I find that I broke my rules. And it can be frustrating, guys. I had a day last week where I took 3 perfect trades in a row. 3 perfect trades in a row. And I took all of my 30% in a row. And I took them on 4 lots, which means on 3 trades, I was down, shit, $1,500. And I had to do the exact same thing I tell you guys to do. So, Jose, if you doubt the rules, and that's okay, and I like that you told me that, was it all luck when it was working, it happens sometimes and it stinks. So let me go through my process. And Jose, this isn't just for you, this is for everybody. So I had a gentleman call me once, and Jose, he was very much in the same position you were. And there was also a gentleman in this class. You guys may remember him. He's not in here, hasn't been for a while. His name was Jose as well. And a couple different things happened. The first thing is Jose, not Jose DeP that I'm talking to in class. The other one, he told me without actually saying it, he said, Mark, you're full of shit. These trades never happen. And that's essentially what he told me. Mark, you are 100% full of crap. These trades don't happen. I know because I can't find them. Um, and he told me that the only thing that he could find is losers, and that nothing was working for him. And he was mad, and he was sad, and he was dejected because he really wanted to be a professional day trader, and he really wanted to make that his career and take care of his family. And guys, we had heart to hearts. We went back and forth in emails for a long time. Um, and it breaks my heart when this happens to people, but sometimes it does. And then I said, well, let's try something. Um, I said, let's try something crazy. I said, do me a favor. Because he was taking high probability trend trades, um, but he was taking 50-50 trades with about 7 or 8 different scenarios to them. And he was so busy. He was so busy trying to create all of these different things, all of these different trades, all of these different rules, trying to create all these different scenarios to enter a trade, that he was missing sight of key points in every one. And it's the too many mind theory. Um, and we made this as a class one day, and I want to share it with you guys because this is a big part of trading. If you're looking for the high probability trend trade, you've got 5 things to think about, guys. You have a big chart, a small chart, and 3 rules, and that's it. That's all you have to think about. And the second you incorporate a 50-50 trade, you're adding more to think about. You're adding the extra 3 rules or the extra 4 rules, and you're thinking about 12 different things on 2 different charts. And what happens is you start taking the 50-50 trade, and rather than taking it in its absolute best scenario, you begin to bend the rules depending on how you feel. Maybe the small triggers didn't smash through the area. Maybe you didn't have the best momentum. Maybe the triggers are split. Maybe there's multiple divergences. Maybe it's not coming from a good bottom. But what a lot of people do is they take this one simple checklist and they turn it into 7 or 8 checklists. And I had a comment with someone in the class. We had it privately, and I told them that they bastardized the rules because they were looking for a momentum trade and mixing it with a high probability trend trade. Um, and as a result, they found nothing except the losers. So the gentleman that I spoke with, I gave him a challenge. I really did. And I said, do me a favor, give me 5 days. That's it. Give me 5 days where all you look for is the super simple plan. And you don't do anything if it's not met. You don't bend it because of your chart reading. You don't talk, you don't look for anything other than this absolute best of the best. And he came back about 9 days later. And 9 days later, his comment was, all those trades that I said don't happen, that I couldn't find. He goes, Mark, it turns out that I was looking for everything instead of the best. And as a result, I was finding nothing. And Jose de P, I don't know if this is the challenge that you're having right now. Only you can answer that question. But for the gentleman in question, it was very much his challenge is he was giving himself too many things to think about rather than the best things. And I know that there's people in this room that have done that, myself included. Um, looking for more. It's guys, I hate to say it, but I'm not always that smart. And when I keep it right here, I'm pretty good. And then when I start adding a momentum trade, now I'm thinking about 18 things times three markets, right? Because I don't want to miss a move in NASDAQ, and I sure as hell don't want to miss a move in crude, and God forbid I miss an S&P move. So now I'm going between these charts, and I'm going, what's this doing? Hold it, what's this one doing? Is this one doing it? Oh shit, I just missed this trade. Let me make this trade up. And I've done it, and that's where I go. And when you do that, you tend to blend things and it becomes harder and harder to find things, guys. So simplicity. If you're not finding the success that you wanted, 5 days. And I know that I put that challenge on a lot of you. And do you know how many people actually make it 5 days? I think two. Out of the 100 people that I've said, give me 5 days on the KISS plan, I think maybe two have made it. I can tell you that there are people in this room that followed it to the word from day one and were funded in their Apex accounts by the end of their first 30 days, that were making money consistently by the end of their first 30 days. And it's not that you are anti-rules, and it's not that you're not capable. What it is that we're all human, guys, and just like Cav is putting in there, and Joel, and everybody breaks rules at some point, whether it is fighting an advantage or trading without the advantage, whether it's ignoring your stop loss because you know you can make it back, or not shutting it down when your goal is met, because why not make more, right? We are all victims of human nature. So the plan tries to curb human nature with a little pragmaticism. So, um, if you're doubting the rules, make sure that you're sticking to the rules, right? Go back and test it. Let's find odds favorable in a clear path. Without question, no 50-50, nothing, right? Odds favorable in a clear path. And let's see what it looked like. I'll tighten this up a little bit because I want you to see a couple things. And I'm sure you weren't up in the middle of the night. But everybody give me a Y, please, if you see that that met the rules 100%. Nothing in the way, best momentum, pulls back to resistance inside of favorable large triggers. Now let's do another drill. Let's scroll forward from there. And I want you guys to tell me to stop if you see odds favorable, absolutely nothing in the way, not even a 50-50, high probability trend trade with the tail. I haven't seen one yet. There's a setup. Oh, but it went to resistance. Resistance held. Am I okay saying this was one of them? So between midnight and 10 a.m., you've had two opportunities. Let that sink in. Between midnight and 10 a.m., you've had two opportunities that are 100% best of the best, highest probability trend trade. What does that mean that you have to do in between these two circles? If all you're looking for is a high probability trend trade, it means you get to do not a damn thing. All right, so now let's look for 50-50 trades. This was a 50-50 trade. I know because the small triggers are through, the large triggers are not. Let's see what this trade looked like on a smaller, faster chart. Divergence doesn't fit the plan. 50-50 trade. Divergence doesn't fit the plan. 50-50 trade divergence doesn't fit the plan. Are you guys kind of getting it here? All right, 10 a.m. The first one was 50-50. Look at all the divergence. Holy shit. And guys, I think that this is what we're talking about, right? Is 90% of what we do is sitting on our hands waiting for advantages. This one didn't give you the pullback, but it was perfect in between the decision-making points. So the point on that is if you're catching all the losers, make sure that you're catching the right losers. Make sure that you're catching the ones that fit the rules. Nothing to do in there, anywhere. There's that 50-50. Did it have divergence at 9/11? It sure did. You might not have taken this trade, right? There's a 50-50 at 720. That's the one without divergence that pulls back right to support and then flies off to the next. This one fits the plan. That's a 50-50. Let's see if it had divergence, guys. If you're catching all the losers, oh, that one didn't fit the plan. If you're catching all of the losers, make sure that you're catching the right losers. Make sure that you're catching the best of the best. Make sure that you're catching the trades with the highest probability. No triggers through a divergence high, guys. That's not a long trade. That's a termination condition. Look at the reaction. So, and I'm not saying this for any reason other than if you're not where you want to be and you find yourself challenged a little bit, guys, you have to sit on your hands longer than you trade. And this is such an important lesson for everybody, is that there aren't a million trades a day. There aren't a million statistical advantages. GWC, termination, you get the reversal. It's into support. I notice that you're not running synthetics. And that's that. Where's your mid band? GWC? Was that the S&P that you're looking at? You may want to rerun a template. And you're not running, well, you do have synthetics, but not really. Because 2394, hold on. That's 44. You should have had a fib right here. No, I know, Jose. All I can relay is what my personal experience is. And what my personal experience is in 3 years of training people is that people that have experienced success and then are no longer experiencing success, there's usually a deviation from a plan. And it's difficult to recognize sometimes in the moment. Um, so, yeah, GWC, you don't have a mid band. You don't have synthetics on your chart. You're flying blind a little bit on a couple different things. And what you may need to do is rebuild a chart, or you may need to just reload the template. But you're missing a lot of information on your large chart. I love your great top, right? And then Jose, I'm here for you. Show me everything you do. Show me every loser. Show me every winner. Let's compare the two. Let's go through um, and see what it is. I know that when I'm not winning, and guys, I have runs where I don't win. I'm typically bending rules a little bit. And I'm not saying that you're doing that, Jose, but this is my own personal. Sophia, you had to take it a couple times. You went long against everything. Well, you're not quite following your rules, right? Because you don't have a termination condition here for the long, which is a little bit challenging, right? No termination. You're trading only triggers, but they don't even agree for that momentum. Does that make sense? Like they don't even agree for the this. Yeah. John's been teaching me a lot about these triggers, so I feel like I can be pretty helpful. And then when you go short with the momentum, notice that your super fast triggers rolled, closed below, and you're able to get down to that problem area. Yeah. And I think it's okay. Alinsky, there is a good chance that on Monday I forgot to go live. Um, there was a day where I forgot to go live. Let me see if it's there. You guys don't realize this, but I take it very personally when you're struggling. And I don't like it when you guys struggle. Yesterday, and then what day was the 27th? So I got the 26th, 27th, 28th, 29th, 30th. No, it looks like I missed it. Yeah, I'm sorry. I missed it, Alinsky. I forgot to go live. Um, I got today recording, though. And then Steve B says when he went on a losing streak, it was because he loosened his rules. He started trading in determination conditions, almost lost every one of them. Back to the basics helped. Um, thanks, Joe. It's not that I take it personally like it hurts my feelings. I take it personally that I want you guys to be successful. And I've been frustrated as a trader. Guys, here's that gap theory again. Price reaches Fibonacci support. Absolutely no trigger lines have broken through. And the large triggers are a full bar away, meaning that the potential is there that this market's going to push back and close the gap. It's not guaranteed, but it keeps me from taking shorts, right? Um, Alinsky, wouldn't it be better for you to show me what you did on the NASDAQ rather than... I'll open up my NASDAQ. I think I have a NASDAQ space. Hold on. I haven't opened it since I rebooted, so let me get those coming up. But I'm happy to. I'm happy to go through on any chart, guys. I'm happy to go through on any market. I'll build a workspace if you need me to. But Steve B, I wanted to give you an amen and a hallelujah. When I break my rules, when I trade in determination conditions, when I forfeit momentum, I lose. When I keep it simple and focused on the absolute best of the best, I tend to win. And there's not much difference. In the moment, it doesn't feel like I'm doing something wrong, and I think that's the biggest thing. I took a short trade this morning on NASDAQ, and it was a 50-50, and it had divergence, and it was into a PSO, and I got my ass kicked almost instantly. Um, and I gave the picture to my brother, and I said, "What did I miss?" And he gave me this feedback. He goes, "Well," he goes, "you don't usually take this trade, XYZ." He goes, "Why'd you take it this time?" And it was because he's teaching me these other trigger lines. And I was convinced that I had them down pat in 2 days. And it turns out that I didn't. So that the feedback helps me a lot. I mean, the feedback helps me a tremendous amount. Um, And I find that it helps everybody. So GWC, I might get with Jason and get a rebuild or re-download data, get the tick on there, run a template. That looks so much better, doesn't it? And then GWC, there's your gap theory, brother. Keeping you out of this short because it may go up and close the gap to the large triggers. That's a completely different picture. I love the picture before you put that fib in there. But that's a big difference, man. That's a huge difference between the two. Awesome. Now you've got even more advantages coming into it. All right, I'll tell you what, my NASDAQ came up. And remember, Alinsky, if I'm going to do this, I have to do it with high probability trend trades. I can't do it with Sophia's trades, or if you're looking for something outside of that. But let's go through it. Let's look for odds favorable momentum. Do you want to do 50/50s too, or do you just want to do clear path? It's not my method. All right, so here was your last potential. You ready? Odds favorable, nothing in the way, pull back to resistance inside of favorable large triggers. You see it? Initial stop has to go outside of the window of opportunity. From your point of entry, you never get touched because your stop is above the reversal bar. Then you get the pivot stop out. You have weak triggers, and it comes up, and it still dances. The original stop keeps you safe if you're gutsy. Third divergence says get the hell out, and sure enough, it goes, right? Yeah, resistance inside of favorable large triggers. But if you miss this one, it's freaking ugly everywhere after it, right? Does that make sense? Well, and there's two ways to do it. There's the area inside of favorable large triggers, or the first close below the triggers, depending on. So you're overthinking it. Too many minds, right? Too many minds. So you don't need help finding the trades. You need help finding the best entries. Whether making the decision, whether or not you're going to take it at the area or wait for a close. Safia, I rebuilt everything that I own this morning on 7. Where is that circle? Goodness, the NASDAQ moves a lot. Guys, this is why new users should probably. All right, so check it out, Alinsky. Let's talk about it. Termination, full reversal, odds favorable. So far, so good, right? Market pulls up to, and it doesn't quite make the midband. Look at how far away your small triggers were at the time of the pullback. This is an instance where if I hit the area, I'm in at the area. Does that make sense? Look at how far the small triggers are. And it doesn't make it. And when it hits the area the next time, my small triggers are pretty close. This is where I take a close on the correct side of the small triggers. Those are really the only two scenarios for me. Um, the rules don't change on the large chart. Let's go through the spreadsheet a little bit. And guys, I really think the NASDAQ is an absolute beast, right? Uh-oh, Alinsky. So this one, let's talk about, oh, thank you. This makes it easier, right? Termination, full. It's the close on the correct side that rockets it up. And if you want it again, it's the close on the correct side. I do if I'm comfortable with the risk, Daryl. Um, Let me open up some pictures. Where's my spreadsheet? And pull it off to the side so that I can do it. These are my entry thoughts, guys. This is my personal plan. Large chart rules don't change. I want you to write that down, say it, scream it from the mountaintops. Large chart rules don't change. I insist on odds favorable. I can do that for you, Alinsky. Um, my large chart rules don't change, especially on the NASDAQ. This is what I'm doing at entry. When I get my reversal bar, whoops, I'm thinking about two things. The first thing is, where are my areas? Where is this trade most likely to come from? And I use traditional high probability trend trade methodology to pick my window of opportunity. As price pulls down, I'm looking at the relationship of my small triggers to the reversal bar marker. And I'm going to tell you, if it looks like this right here, these are going to be below the reversal bar marker when I get to the area, which means I'm going to sit on my hands and I'm going to wait because it may push lower. If I'm getting close to the area and those small triggers are still way the hell above it, guys, I'm in at the area because price corrects very often. And these are my thoughts. And then you have to factor in other things, right? If I'm waiting for the area and the triggers are close, is it worth it for me to have $200 worth of risk on a 50-50 trade? It's not for me, so I'm willing to let it go, right? Everything is cranking down, and this is kind of a key look. Alinsky, dig it. Look how resistance, or these small triggers that are so close to the areas act as resistance, and it keeps pushing, right? Pushes past the mid-band, past the fib, right to the 1-to-1, and then there's my close on the correct side. This gets priced to the other side of momentum, and sure enough, it becomes an easy trade. And I think that the biggest thing is you have to be willing to say that's too much. I don't want to pay that. Two divergences on a 50-50. If you're going to take it, look at how the close on the correct side of the trigger coming off the large triggers after the great termination condition, that becomes the easy trade. Does that make sense, Alinsky? All my little Nasdaqians? And now you just have to practice it. And in the moment, if it's close, guys, it's okay to say, I'm going to wait and see what happens. Uh-oh. Well, then I'm glad you didn't hear what I called you. You're back. Go through the spreadsheet. So, Alinsky, do me a favor. Go through every picture in the NASDAQ section there. This one is recorded. And do this. So you open this picture. If you have a question, take a picture, type it on there. You can post it in the room. I'm glad to talk about it, or you can email it. I'm going to be a little out of pocket for the next couple days, but after the weekend, guys, I will no longer be professionally homeless, so my life will be a little bit easier. But the large chart always leads the way. The large chart tells you to do what you're supposed to do, right? So odds favorable coming off the termination condition. Let's see if it gives us an opportunity. Here's my window of opportunity. NASDAQ's not going to work with us today. I'm just trying to see if we can get a live example, right? Obviously, we're into a termination condition now, but as it pulls back up, let's look at the small triggers compared to the reversal bar. There's the reversal bar marker. Right now, they're right at it. Next bar up, they're right at it. Guys, the NASDAQ is fast. And Gary, I should have been better looking, but what are you going to do, right? Let's see if we can get a couple more up bars and watch how the relationship of the small triggers to the reversal bar marker. Come on, NASDAQ, push. Is this making sense live, Alinsky? All I'm doing is I'm watching this. I'm still waiting for the best area. But when I get here, I'm going to see what this looks like. They are, Paul. It's very much a termination condition. But we're trying to get a little lesson on the trigger lines. All right, they're below it as we get closer. But see how now they're straddling it at the area. They're not below it at all, right? And we come into the area. Do you see it, Alinsky? And of course, it's a termination condition. But this would be enough to keep me from taking the short at the area, because very often when they're straddling or above, they'll behave as support, and maybe it will. You see the relationship again? If these one-to-ones weren't there, this would have me waiting. And now I'm kind of hoping that they act as support here, but that's kind of how my head goes through it, and I'm totally willing to not take this trade until I get a close on the other side. If my rules were met, I would, but not into a termination condition, because that's just ridiculous. And notice how even a reversal bar is not below the small triggers. Now I get a close below the small triggers. If I were going to go, I might go like that, but it's still into a termination condition. But at least now they're on the correct side of things, right? And with all that momentum, it's probably going to go down and retest. Pretty cool, right? But that's it. And then when you get the close below, if it's too much risk, drop a limit order halfway through, or look for a little spike or something to reduce the risk, because you already know where your stop goes because you've had a reversal bar. Pretty cool. That's how I trade the NASDAQ. But I definitely don't trade it into those yellow one-to-ones, because for me, and then, yep, so let's see if we can find one of the looks. Bum, 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 bum. This is the small chart. Dun, 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 dun. Let me see if I can find. So let's say, oh, that's not it. Dun, dun, dun. I'm trying to find an instance where it kind of did everything that we wanted it to do. Absolutely. I'm glad that you understand it. I don't always say things so people get it. And sometimes I have to say the same thing 10 or 20 times, and then somebody goes, oh, yeah, cool. So check it out. Short trade, right? Everything says down, odds favorable, looking for the money. You know that's what I do when I'm not teaching class, right? Fly to Dallas, I got you. Here's the pullback to the area. Look at how far away the small triggers are. That tells me go at the area. Everything says down, the rules are met, smalls are a full bar away. I go at the area. Everything says up. Here's the area. Look at the small triggers so far away. I go at the area. That's me. That's my plan. You're welcome to steal it, to adopt it. I'll work it with you. No, the area means the area inside of favorable large triggers. So, Alinsky, identifying the point where the market is most likely to continue never changes. It's the area inside of favorable large triggers. The window of opportunity is always the same. Let me find, where's my picture? The only thing that changes on my NASDAQ trading is the position of the small triggers when I get there. So in both of these cases, if this was a NASDAQ trade, I would enter at the area because the small triggers are a full bar away. Here, I wouldn't enter at the area because the small triggers are closer. Love it. Great lesson. Now you just have to practice it. And the one thing that you should do that a lot of people don't do, Alinsky, is go back to all of your NASDAQ trades that you've taken, right? Look at the pictures and see how many times that would have helped, right? And you're going to miss trades with this method, but you're also going to avoid a lot of the losers. So go back and study what you've done and see if it would have helped. That's what I had to do. So Gary, you said because it was a termination condition, because there was a gap theory, you didn't take the HVA? And then when it went anyway, you said that you should have taken it, even though your rules weren't met? That's dangerous thinking, guys. Dangerous thinking. Now I have remorse because I didn't take the trade, right? Were your rules met, Gary? That's the question. And I feel like I know your rules, and I don't feel like they were. A termination with the gap theory, split triggers, right? I don't think that's your rules, Gary. I think you did an awesome job following your rules. And I think that this was the market being an asshole trying to tempt you. So, virtual high five coming from my end. Look at that. Support, support. Divergence from support is another killer. Yeah, great job. And it stinks, doesn't it, when it goes anyway? It went anyway, buttheads. Great job, Gary. It was a great read, too. Man, that was a solid read. And then Pinieski didn't take the 50-50 after the consolidation. I am a firm believer in that. Because a 50-50 after consolidation is either going to run like a mofo or it's going to stop you out quick. It did run. Again, trying to teach you, right? 3 divergences off of a large chart support. No divergence. Oh, man. I'd skip that one all day long. You just got to ask yourself, what do my rules say? Cav, you took the short back into it. Made some money. Nice job. You let it come back and retest. Cav, did you get the gap theory lesson, though? Your stop had to be way up here on this trade. Oh, you caught it, Dwight. Nice. Momentum style. Straight to the fib. I was wondering if someone was going to show me that one. That's awesome. Area breaks, odds favorable, breaks the one-to-one, pulls back to it. That's just quick money. That's a rock star trade. Right now, Safi is excited about this trade. That's Safia's trade. And Gary, typically the markets get slow and range bound before an FOMC meeting. Yeah, just trade your charts, right? That's all you can do. Just trade your rules. There's been nothing slow about this market today. I've got a 50-50. I've got a tiny window of opportunity. If I have rules to take it, I will. If I don't, I won't. Crude oil is a 50-50 without a lot of momentum, right? If I have rules met, I'll take it. If I don't, I won't. And then NASDAQ's doing the same thing. I've got a clear path, but I don't have great momentum. And I really don't have areas inside of favorable large triggers. So with weak triggers and no areas inside of triggers, where's this weakness going to push it to? Is anybody 100% sure? Or is it going to be somewhere in there? I don't know which one. I'm okay not knowing. Because the truth of the matter is, if I sit on my hands and do nothing, um, I can't lose money by not trading when my rules aren't met, guys. There is no cost of doing business sitting on your hands. What I find is I start to get bored sitting on my hands and I fabricate a little bit. Well, it's not the best momentum. I know that. And well, maybe I don't have areas inside of favorable large triggers, but it's a mid band. And I like mid band. Maybe I'll go short. I mean, my small triggers are above the reversal bar on NASDAQ. Oh, that didn't work. Let me go short again at these one-to-ones. Daryl, I teach momentum first for a reason. Um, and I'm telling you, if you just trade with momentum, your likelihood of success goes up exponentially, right? When the market is absolutely railing in one direction. Safia, you are trading loosey-goosey, my dear. But I know which chart leads the way. Ugh. If I didn't know what you were doing, you would absolutely terrify me. You put a lot of faith in those super triggers. You're putting a lot of faith into those super triggers. You're trading into fibs. You're trading against everything. It's just, I get it. Some days we rush. And I'm not even saying that they're bad trades. I'm just saying you've got a lot of faith in them, a lot of trust. Well, it wasn't the fib. Is it going to be the mid band? What do you think? Maybe. Alinsky, do you see how if you were taking a guess and you wanted to take one shot, you could do that? Close below. It's coming back down. It's not going up with those strong triggers. That looks like one of your entries, Sophia. We'll see. That's why we don't make predictions in class. Because someone's going to listen to you and take a short, right? We don't want to do that. I wouldn't, Alinsky, because I don't have odds favorable. I don't have areas inside, so I wouldn't. That's it. If I were playing the hypothetical game, and you're okay, Sophia, at least if I waited for a close below, I'd have a fighting chance with established risk, right? Or wait for the small chart to roll. Wait for the small triggers to roll over and head the right direction. Because this says down, doesn't it? And the path is clear. And now your small triggers are rolling. But it's still not a short trade. There's just nothing to do. That's the hardest part. Is sometimes there's just nothing to do. Sometimes there's just no rules met. And you got to do nothing. And doing nothing is boring. Weak triggers, right? That doesn't mean that it's going to roll. It just means that it may push a little higher. But the trend is still down. The triggers are still down. Boring is way better than losing. Your synthetics are down. Your large are down. Now your smalls are coming down too, right? It's FOMC day, Safia. So check this out, Alinsky. Now every trigger on every chart agrees. My small triggers are coming down with strength and they're right at an area. This is what we call the continuation of a trend trade. If you're going to take a shot to go with the trend, to go with the direction, to go with everything down, a little stab back right to the small triggers at an area creates a low risk scenario. Paul, we talked about this one not too long ago, that continuation trade. When it all says down, but it kind of doesn't work out. Sorry about that, guys. Right? It all still says up, but you're not sure where because of problems. Letting the small triggers roll and taking a stab back pushes beyond the best of the best areas, but the large chart still says it's doing it. That becomes a continuation. Guys, that one takes a lot of practice, and it's imperative that the large chart still leads the way. But you can't fight. Jose to P, take care, man. We're going to get there, I promise. Does it guarantee a winner? Is it guaranteed to continue? No. And now three divergences in the same location says that it's a little problematic. And we're just waiting. That's it. Just waiting. Hoping for the best. Looking for advantages. What market do you guys want to watch? Michael, you made it back in. Nice to see you. Probably not NASDAQ. S&P, Cav. Everybody take a picture. Tell me what you see. Describe it. What's the trend? Let's chart read. Trend is down. Do I have odds favorable momentum? Psh, there's two. Do I have a clear path? Cav says I do. Bobby says 50-50. What does that mean? Cav, 50% of my triggers made it through, but 50% have not. Happy holiday. Oh, awesome. Which means that this area has the potential to break because of the momentum. But check it out, Cav. Divergence, divergence, divergence. Holy smokes. I'm sacrificing a clear path as well as momentum. That doesn't sound like a recipe for happy. In fact, that sounds like I've forfeited 2 out of 3. Could it go down? It could. Absolutely. Does it have a statistical advantage of going down at this point? No. Is it worth risking your money? And watch this. It's going to go down just to get you guys to take it next time. My thoughts on 50-50 entries, guys. They're worth exactly what you paid for them. Absolutely nothing. When I have an area with the potential to break, right, I don't have a clear path. That's important to me because I revolve everything back to advantages. So when I don't have a clear path, they don't have to be, Cav. When I don't have a clear path, it's imperative to me that I still have strong triggers, small outside of the large. It's super important to me that I don't have divergence. I don't want a loss of momentum. And man, my window of opportunity better allow me to manage my risk with a small amount of risk on the area. This is my best case scenario. for a 50-50. And honestly, I want to see it come from a good top or bottom. On the same note, go in the other direction. When these areas haven't broken, it better be beautiful if I'm taking this trade. There's a couple of them. I'm not willing to sacrifice the other two advantages if my path isn't clear. They're trying, and it may go down. The blue fib. So where's your window of opportunity, Cav? Let's go through this one. From the highest point of the triggers to the lowest point of the triggers. This is your highest point of support or resistance. This is your lowest point of resistance. Are you willing to enter at 33 and put a stop at 38.50, hoping that an area breaks with all these divergences? That just sounds like a poor investment. In order for the path to be cleared, check it out. We're going to work off of this fib. No triggers, potential to break. Now it's broken, it acts as resistance. No triggers, potential to break. Small chart is saying that we're losing momentum along with that. So I'm hoping it goes up to kind of prove a point that there's a way to take these potential to break trades with the best advantage. And it all revolves around giving yourself a lot of momentum. It involves around minimal risk, right? And we'll just see what happens there. But that's a 50-50. That is not a broken area. And what happens at fibs, guys? Decisions are made. This is where buyers are trying to decide if they're going to buy. And this is where sellers are trying to decide if they want to keep pushing down to the next key area. Ron, we'll see what happens. Second higher divergence, Ron. Remember, I think I sent you a message about that. One divergence is cool. A second higher divergence, Ron says we're going to hit that reversal bar marker. He's been studying this. And that would be a sad loser on a 50-50 trade. Look at it work its way up, Cav. Pretty cool, right? You have a plan that keeps you from hoping. You have a plan that keeps you from guessing. You just have to be willing to sit on your hands and do nothing. I draw during the day. I have a sketchbook, and I draw when my trades aren't met. I play video poker, throw paper airplanes at my wife, whatever. Anything other than jumping in, oh, there was no correction. It was just a lesson. That's all it was. Just a lesson in areas with the potential to break. Man, if you guys don't talk, you never get the lesson. So Cav, like seriously, I'm playing favorites today and you're on the list because you keep asking questions. You're not willing to sit there and not have the answers. You're going to get right where you want to be. Keep it up, Cav. Dude, it's not a waste of time. Cav, this is your classroom. There are 37 people that shouldn't matter to you in this room in regards to your education. And the same is true for everybody. Joel, there's 37 other people that you shouldn't worry about if you have questions. Ron, there's 37 people you shouldn't worry about if you have a question. And that goes for every one of you. Be selfish with your time in here. If you're monopolizing it to a point to where I feel as though it's disadvantageous for the rest of the classroom, I'll cut it short. I'll send you a private message and I'll talk to you privately. I don't mind doing that at all if need be. Sometimes, gosh, with my brother, I didn't get a concept. And I was like, man, John, I'm struggling with this one, but I didn't want to ask you the same question 38 times because sometimes you have to hear me say something a specific way for it to click. And sometimes I can't make that happen in a reasonable amount of time. So if I ever get to that point, then we'll figure it out. It's still creeping up, isn't it? Guys, if you think of Fibonacci areas, yep, Joel, I have days where I can't believe that I teach this classroom. Total imposter syndrome. This is where decisions are being made. Absolutely. Isn't it pretty cool that you guys knew about this decision-making area? When did you learn about it? At 9:46 a.m. You knew that buyers might be trying to buy or that sellers might be taking profits, right? I'm sorry. That's amazing to me. Whew. Crude oil's crushing it to the downside. You know what sucks, guys? That's probably not your money because you didn't have the rules met. NASDAQ not only has divergence in weak triggers. Oh, look, Alinsky, it worked. It worked. Because the sellers are in control, Cav. How's that for an answer? Why is it going down so much? Because the sellers are selling. That's it. That's the only thing you can be sure of. Why does it go up? Because the buyers take over. What can you do to affect it? Not a darn thing. I'm telling you, it's liberating the second you realize you're not in control. It really is. When you don't worry about ticks, when you don't worry about anything other than execution, guys, it'll free you from all the worries that you have going in your head. Um, and today has been a stellar example of it. To minimize your learning curve, guys, post in the room everything. Everything you see, everything you do, everything you think, everything that you question, post it in the room. And let's have a conversation about it. Don't hide your losers. I'm going to say that again. Do not hide your losers, guys. I want you to embrace losers in the educational process because that's where you're going to get the most out of something is by recognizing what you did wrong. Some of your charts don't have the reversal bar, Tony. The marker. You're on 8 though, right? You should be able to go to indicators. And I don't know what causes that. But if you go to reversal marker 1, show the rule, you don't need it. You don't need to show the rule. Um, show reversals needs to be true. So you can go through and take a look. And let's see what happens if I do show reversals false. Let's see if it goes away. Oh, it's going to totally reload. NT8. You guys going through and checking your settings and making sure that that is true? So go to indicators, T3 Fibs Pro Trader, take a look at it. And if it is true, then maybe we need to reload a template. Yep, see, now I'm gone. I don't have a reversal bar marker. So show reversals has got to be true in order to get that reversal bar marker in there. And then if it's not working for some reason, they paint and then disappear. Man, I wish I was a better tech person than I am, guys. Have you guys run it by Jason to ask him if there's a reason that that may be happening, if there's an easy fix? Not yet. I would just send him a note real quick, send him a message. And he may have that answer for you. Jason's amazing, isn't he? I'm on 7. I am. I do my live trading on 8, but I like 7 for the classroom. because I don't have the best video card, and I don't want to risk losing charts mid-class on you guys. I'm going to build a chart though. I just opened up 8, so I'm going to build an ES chart real quick, and let's see if we can just play with the settings and make some stuff work. And I do have tick replay checked, so I'm bringing up an S&P 5-1. I don't mind. Nobody has any rules met right now, so let's get my tick data in. We'll take a look real quick. Take just a second to load. How's everyone doing today? Are you getting what you need? Are there concepts that you wish I would talk about that I'm not talking about? And I want to remind you guys, John Novak's going to take the room on Friday. And everything that he does revolves around you having a great foundation, right? So focus on your foundation. Man, some days you're the boot and some days you're the butt. So, well, I'm still calculating, but I don't see a reversal bar marker just yet. And then, Tony, we're going to work through it. We're going to see what it looks like. I'm still calculating. Cav, take care, man. I'll see you in the morning. Man, it's slow. My poor little computer's chugging. And that's just one chart. While that's loading up, let me remind you guys, figure out the trend first, right? Is it... No worries. So what do you want to know about them? Man, that's the easiest thing. Rather than me just starting to ramble about charts. Cool. So I'm going to do this. Dun, 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 dun. I'm going to go here. And what I'm going to do is I'm going to give you homework. I'm going to go to videos and I'm going to hit search. I'm going to type in indicators. And then right here, Michael, is the introduction to the indicators hosted by John Novak, walking you through everything that you're going to see on the chart, a little bit, please, about how it comes to be and what it means to you. All right, guys, I'm up. I do have my reversal bar marker. So if I right click and go to indicators, Safia, do me a favor. Take that same chart and tell me why you did what you did. I want to hear it from you. Don't make me guess, especially if it was stressful for you. All right, so under indicators, let's go to T3 Fibs Pro Trader Sim, or Sin, depending on your move. So reversal bar marker 1 is the one that's native to the chart. You guys that are curious, show reversal price, show reversals. That's what we're looking for here, and then that'll give you the color. So let me take a picture of this. And then are we having challenges of it not showing up? Even though this is true? Is that what's going on for you guys? Yeah? Um, yeah, Jason. Have you tried just reloading the template, Tony, and see if that changes it? Alinsky says press F5 on the chart. What does that do, Alinsky? Does it reload it? Let's see. F5. Ooh, it is going to reload it. So F5 refreshes just the one chart. Man, I just learned something today. That's pretty cool. Cleared the area with room to the target. So Paul, this is the second or third that you've shown me with weak triggers, and divergence. I feel like this is problematic for you, right? Now we're developing a pattern. You're giving more to the clear path than you are the momentum here. And with that loss of momentum, dude, you just don't know where it's going to come from. You don't know if it's going to be the fib or the one-to-ones or the mid-band. Does that make sense? And then just for grins, yeah, just for grins, reversal bar from way outside of the outer bands. No, I totally get it. Paul, remember when we talked about reversal bars to initiate? Would it be worth the risk? Go back and look at these and see where a reversal bar might help a little bit. Because you know it's a good look and you know it's likely to continue down, but it's just exhausted. You're beyond the outer bands on your range chart. You've got divergence and weak triggers. All of your areas are above the triggers, right? See how many of these where a reversal bar gets you into going with the overall trend. Um, Make you study a little bit. And then Ron, it made it. That's what you call creating a plan. Nice job, Ron. All right. Weak bottom. So Sophia can't be a 50-50 into a term. It's either got to be a 50-50 or it's got to be into a term, right? So it's either a termination or it's a 50-50. Does that make sense? This is a 50-50. This is into a termination. You do have the momentum without a doubt. Your entry, you're trading off of the triggers here. Sure. Hold on. Let me grab a picture for you. And this is just 101 stuff. No triggers through, that's a termination condition. It has nothing to do whether it's likely to break or likely to not break. It's just 100% that's a termination condition. This is a 50-50. 50% of your triggers are through, 50% are not. This is an area that's broken. So a great lesson on this is when you're coming from a weak bottom, the likelihood of this breaking goes down a little bit. When you're coming from a fib, the likelihood goes up a little bit. But what you've pretty much done is you've traded directly into a fib with everything below you. And remember how fibs are decision points? There's the market making that decision. And then eventually the decision gets made. And Sophia, this is where your trades typically have the highest amount of success, is on the other side of the decision-making spot. So because you went directly into it, you had to suffer a little bit. You still had the momentum and stuff, but letting the large triggers roll a little bit, something. I know why you did what you did, but that's why that one wanted to make you sweat, because it was directly into the termination and it was every trigger down into the termination and it was odds favorable with a clear path to the downside on your 50-50, on your 55. And then look at how when they roll and line up and see how it pulls back and the super stay above. And there's your pullback where everything lines up and closes above. And that's this one right here. And that's the one that rockets. Do you see it right there? Just using that chart a little bit. And I'm still learning to read it. And this is what Friday, Safia, John Novak is going to be able to refine it a lot. But I'm going to tell you, not to give you a big head, he sends me messages every now and then going, dude, Safia is killing it. And this is just that little patience refinement piece. I dig it though. I think it fits your rules. I think it's just a little bit premature. Nice job. Hey, Mark SP. Same thing, right? And then there it is right there. That's where it all comes together. That's the easy one. Everything rolled. It starts to go up. Everything begins to agree over here. That's the oh my gosh, I'm not going to stress out entry. So beautiful. You guys both had the same idea. I'm a gun jumper. I don't know if you guys are. He did it better. I'm a gun jumper. I'm a When you get to a point where you read indicators and you read charts really well, you start to anticipate a little bit. You start saying that's going to definitely go down, right, Paul? And you forget that sometimes you got to wait a little bit, and you got to wait for that little bit of confirmation. And depending on the market you're trading, sometimes it's a reversal bar that gives you the best chance of success. And then there's that 50-50 with three divergences. You guys have a plan to not take that one. And then where was that crude oil? So Paul, that's your first reversal bar. What do you think about that? I think we just found your momentary safeguard, my friend. When it isn't perfect, is there any reason you can't wait for a reversal bar? Because if it's really going to go down, it's cool. And yeah, so that keeps you out, right? Keeps you out of that loser. No bar, no trade. If you figure it out, send me a message and tell me how you did it. So, yeah, Paul, I think that that's a good one. When it's not perfect, insist on a reversal bar. And if you don't get it, and obviously, like you said, by the time we get up here, do you really want the short anymore anyway? Get old, that'll do it. I already got there, I think. You guys are all good, and everybody's just going to keep getting better, guys. And that's the amazing thing about what we do is is you will have points of regression. Um, you will have a step back every now and then. Safia, I'm going to pull up your picture real quick. None of these lines to experience are straight. There's dips and waves and all of it, guys. One day you're going to be on top of your game, and the next day it's going to be like you forgot to read indicators. And the longer that you stick to it, the more feedback that you get, right? Safia's crushing it, but she still presents stuff where she's like, man, this felt a little stressful. And we talk about why it felt a little stressful, and then Mark goes, yeah, I've been through that. You're not alone, Safia. Check it out. A little bit of patience. And it's cool because it's a community. Um, and we're all going to get there, right? Just takes a minute. So that's it for me today, guys. I hope you had a great day. I hope you learned something. Michael, I know you were a little late, and that's okay. It's the same thing every day. The only difference is when you guys ask amazing questions. So